Good morning, sir. No. Good morning, sir.
Doshi, how are you?
Fine, sir. Good morning.
Hello. Good morning. Good morning. Am I audible?
Hello.
Hello.
हाँ, I am audible, sir.
हाँ हाँ, आपकी आवाज आ रही है, मेरी आ रही है?
हाँ, आ रही है, sir.
Okay. No, why I'm asking is because there is a power failure here at my residence,
Okay.
and I have connected through some alternate internet. So I thought let me just cross check.
Sir, problem is there.
Good morning, Chairman.
Let us start.
We will wait 5 minutes.
Vishal Doshi, sir, very good morning to you.
Good morning, Chairman. Abhishek, how are you?
I'm good, sir. How are you, sir?
बस बढ़िया है, all good.
Yes.
हो गया fly hosting?
Yes, अभी हुआ है, sir. 9 बजे.
चलो बढ़िया है. Great, great,
sir.
excellent. So this is what, day 3 of
Day
the
3 of
DTRC?
Yes, sir.
Yes, sir.
Great, excellent. So I think I should end by what, around 11 and 15, because
Yes,
next
sir, 11,
session Tarun bhai ka
by
साथ
11
आ रहा है.
by 11 you can conclude your session, and for 5-10 minutes we can have question answer afterwards.
Done.
Then
Fair
after
enough.
your session we will give break for 10 minutes and we will start Tarun Ghia sir's session at 11:30.
Okay,
I think we
sure.
start. Internet गेला. इंटरनेट जाते इथे. अभिषेक,
हो काशीनाथ,
अभिषेक,
बोला.
can we start? Can we start?
Yes, I can. Just give me 1 minute.
गुड मॉर्निंग ऑल ऑफ यू. नमस्कार. सर्वप्रथम सर्वांना स्वातंत्र्य दिनाच्या हार्दिक शुभेच्छा. Today is our 74th Independence Day. In spite of this, we have a lot of attendance today. Today is the third day of our DTRC. Today's topic is our ICDS in SME perspective. Today we have honor that we have today our WIC Vice Chairman CA Vishal Doshi sir. I welcome all of you on behalf of Pune branch. I request Abhishek Damne, Chairman, to give opening remarks.
Yes. Thank you, Kashinath. Wish you all the members a very happy Independence Day. Today we are celebrating 74th Independence Day. I wish on this Independence Day we would be independent from our lockdown. Soon the vaccine is rolled out, and we are free to move outside, and we are free to work also. So with that hope, I wish you once again a very happy Independence Day. Today we had flag hosting at branch, but for only office bearer and some of the staff members were present. We also have privilege of CV Chitrai sir, who is present here. I request him to please give his opening remarks over here. Then I will request Kashinath to please give introduction of Vishal Doshi sir, and we would start with the session.
Namaskar, sir. Namaskar. It is proud privilege that we are having gracious presence of Vice Chairman of Regional Council, and besides being Vice Chairman, we have had occasion to listen him on topics relating to taxation, and really his wisdom and knowledge in taxation and other topics is worth emulating. And I'm sure that his presentation will definitely enlighten us on ICDSs, which are very important. And now, perhaps in earlier era, whether you have followed ICDS, you have not followed ICDS, perhaps concerned. But now, because of advent of this faceless assessments, and where particularly a team of members, one senior assessing officer and one junior one, when both of them would be scrutinizing your returns, all such small and big points will come to really light, and one will have to seriously consider following this ICDSs. So this is very appropriate topic. On the occasion of this Independence Day, inform you that Modi ji, when he had occupied ICDS, he lamented about world-class firms, world-size firms from India, homegrown firms. And then why it should not be there, since there are 3 lakh plus chartered accountants. Actually, at council, one step has been taken, and you will be really pleased with that particular. From sole proprietorship, partnership, grow larger, say, corporates, and not only corporates, but nationwide mega enterprises, maybe a certain Indian enterprises doing worldwide businesses. So they also require big chartered accountancy firms to render, and big not only by size, but also by expanse of knowledge. So there is need that there has to be a multidisciplinary firm, maybe accounting, that is our domain, corporate laws also is our domain, but they also may require some feasibility report. If the expansion is going on, whether the expansion is worthwhile, whether there are any other regulatory impediments, they may require sustainability report. So several multidisciplinary services would be required by such large enterprises. And even for small enterprises also, there are no exception. Presently, multidisciplinary firms are not seen. You see all the firms of chartered accountants, only chartered accountants are partners. So if we want to render services in different arena, maybe like valuation, you may require assistance of an engineer, an architect. So how to go about it? So
Chitra sir, voice is breaking. Chitra sir, I think some connectivity issue. I think some connectivity issue is there with Chitra sir. Uh, Chitra sir will joining later. Will be joining later. Today we have CA Vishal Bhai Doshi. He is our vice chairman of WRC. He is also a partner in KC Mehta and Company. He is qualified chartered accountant in 1996. His part his specialization in statutory audit and tax audit. Chitra sir joining here from here. We start with
so just to conclude the point, even enabling provision is available in the other acts like Cost Accountants Act, Company Secretaries Act. So those acts also authorize partnership with those professionals. Presently, advocates are having not having their regulatory permissions, but we will also represent that advocates be allowed to join multidisciplinary partnership. So you can have partnership with such persons. Maybe soon we will also, the council will also come out with the form which will enable constitution of multidisciplinary firm. So I think this would be a good announcement for on Independence Day, so that we also can have homegrown mega firms. And I'm sure that today's speaker will take the first lead in having the largest mega firm in India. So with this, let us continue with the introduction of the speaker. Kashinath. So sorry, Vishal, to interrupt you. Actually, my connection got
No problem, sir. It was a privilege. Otherwise I would have missed meeting you, sir, today.
sorry for interpretation. Uh, Today we have our CA Vishal Doshi. He is a qualified chartered accountant, partner in KC Mehta and Company and Praveen Doshi and Company. His specialization in statutory and tax auditation on certificate and intensive course of the ICI. He is a faculty rating and assurance. He is a faculty service standards. He is visiting faculty of postgraduate
Kashi, your voice is breaking.
He
Hello.
is a Baroda branch Vikasa past chairman. He is a committee member of Baroda branch from 2000 to 2002 uh, and secretary in 2003. He have his in various committee of WRC for the year 1920. Without taking time, I request Vishal sir to start the session.
Yeah, thanks Kashi for that introduction. Good morning, friends. At the outset, I would like to wish a very happy Independence Day to everyone. I would also like to thank Pune branch led by Chairman CA Abhishek Damne, Secretary Treasurer Kashinath, Vice Chairman Samir, and also the immediate past chairman, CA Ruta Chitle ma'am, under whose chairmanship I had the privilege to visit Pune and make a presentation for with members as well as with students on the same day. And also the managing committee members, Rajesh Bhai, Amruta ji, Abhishek Zavre ji, and all the participants. Friends, it is indeed a privilege for me to be present on this very special day amongst all of you. I'll just, friends, I had a power failure just now at my residence. I am on a dongle. In case you find any difficulty in either my voice cracking or in the screen being shown or anything, please feel free. Because these are some challenging network issues that we all are, I would say, subject to and living with. Uh, yeah, so Kashi, is my PPT visible?
Yes, sir. Visible.
Okay, fine, great. So friends, today the topic that has been given to me is ICDS with respect to SMEs. I have twisted it a bit. In fact, I wanted to make it more interactive, or I would say more interested and more practical oriented. And therefore, I have changed it a bit about with respect to practical issues on income computation and disclosure standards versus the accounting standards. And we are going to deal with some of the practical aspects on it. Friends, just to give a background, though all of us are very much aware about ICDS, because it has been some time since we have been required to report under the Form 3CD. But I would just refresh that it was way back in 2014 that the accounting standards under 145.2 had been replaced with ICDS. So till that point in time, we had just two accounting standards under the Income Tax Act, which are AS1, which was disclosure of accounting policies, and AS2, prior period and extraordinary item and changes in accounting policy. So these were the two standards, and then by way of the 2014 amendment, ICDS was born. And on 16th Feb 2015, the first set of financial statements, because Ind AS, typically if you look at why ICDS, is because I would look at it that it is the implementation of ICDS has been synchronized with the implementation of Ind AS. Ind AS, all of us know that they are the accounting standards linked with the IFRS, I would say, and where there is a lot of fair valuation and non-historical cost concepts that are being followed, which swings the P&L balance sheet and does not give the real income of any entity. Whereas income tax is based on the real income, and therefore to bridge the gap, ICDS were notified. And initially they were to be made effective from AY 16-17, via the CBDT circular, and 10 ICDS were notified. In the meanwhile, even AS6 and some of the AS were notified at that point in time. And subsequently, the final ICDS came into picture from AY 17-18, and even the tax audit form 3CD was amended at that point in time. And when these ICDS were notified, there were a lot of litigation, a lot of I would say PILs or appeals that were filed before the various courts. And then there was this judgment of the Delhi High Court in 2017, making some of the provisions of the ICDS ultra virus. However, the government did not change any of the provisions of the ICDS, and in the subsequent budget, that is Finance Act 2018, the government modified the Income Tax Act to make all the provisions of ICDS in line with the Income Tax Act, and that is where we are today. Friends, I see a lot of youngsters in this participants group. So I would just like to mention one thing, that in March 2016, when the AS were modified, so what has happened is that AS6 was omitted, that is on depreciation. There were minor changes to some other standards, and AS10 was brought more or in line with the Ind AS and IFRS. And the standard AS10, which we all had studied, I would say about me and those in my times, as fixed assets, the name of that standard has been changed to property, plant and equipment. Why I'm mentioning this is that because I have come across a few financial statements where in the significant accounting policies, I have seen that the reference to AS6 is being done under the policy of depreciation, as well as the policy on AS10. It has the heading and the language of fixed assets, which should be changed from fixed assets to property, plant, equipment. So this is has got nothing to do with ICDS, but I thought that I would just draw attention that how we can improvise on the reporting aspects. When we come to ICDS, like we mentioned, it's applicable from AY 17-18, and it is applicable to all SSEs having income from business profession or income from other sources. It is applicable to SSEs following mercantile system of accounting. Friends, here I would just like to say that we should not see, because one thing is there that we do have the reporting under tax audit, but it is not that ICDS is applicable only where the SSEs are subject to tax audit. It is applicable to all the SSEs, and therefore when we are filing the return of income, especially the ITR on the business profession, there is a section on the ICDS reporting. So please, when you are filing the return of income for any client who is not subject to tax audit, but ICDS would still be applicable, and therefore kindly look into some of the aspects of ICDS and just ascertain whether there would be any impact with respect to ICDS on such SSEs also, which are not subject to tax audit, but for which ITR is to be filed, and therefore necessary adjustments to the computation of total income would still be required to be made, although the SSE would not be, or your client would not be subject to tax audit. So ICDS is only for the computation of total income, and it is not for maintenance of books of account. By which what I mean to say is that we don't have to recast or restate or reaccount any of the transactions which ICDS requires. It's just an adjustment which is required to the computation of total income. Since no book profit would get impacted or affected because of ICDS, MAT would not get impacted because of adjustments made by way of ICDS. ICDS is not applicable to presumptive taxation except for determining the revenue. So the ICDS on construction contracts and on revenue, these two we will have to ensure that the client, even though under presumptive taxation, the top line which we say, which is the revenue, the income, is in line with the ICDS, and because it is under presumptive taxation, the rest of the ICDS would not be applicable to such SSEs. And provisions of Income Tax Act shall prevail over ICDS in case of conflict. So these are the salient features with respect to the ICDS. Friends, we are all aware that the reporting under Form 3CD is required for the purpose of ICDS. And here I would like to draw attention of the members that please ensure that in your office, especially those who are practicing members, that in your office, that whenever the 3CD are being signed off, that please take cognizance of the ICDS. Like Chitle sir mentioned, that the government has now moved into e-assessment, faceless assessment, a lot of I would say electronic assessments happening. They might just run a program that under certain situations where the ICDS impact is nil, or certain places where the auditor is supposed to report but has not reported, and they might throw up notices or queries with respect to such transactions. Therefore, my request to all the members over here that please do not take this reporting under ICDS, or I would say per se the ICDS themselves lightly, because that is one area which the government would definitely now start focusing on. So clause 13D, whether any adjustment is required to be made to the profits or loss, then you have to say yes or no, which would depend on your reporting under 13E. So 13E, I would say that these are the 10 ICDS where the details of adjustments, if any, they have to be mentioned. So we'll go through, like I said, that I would be giving more stress on some of the practical areas rather than the theory. And we would see that which are the some of the areas that as SMEs or SMPs, I would say that we need to take care that these might impact the adjustments or the reporting. And clause 13F, reporting is disclosure as per ICDS. Friends, here also, I have come across a few tax audit reports where I have seen that not applicable or nil is what is mentioned under 13F. I would agree that there under clause 13E, where you have to quantify the differences, there might be reasons that there is nothing and you give 0, 0 in under both the columns, net effect we have 0 dijiye, so chalega koi no problems on that. But when we come to 13F, these are disclosures. Now, when I talk of accounting policies, we need to make the necessary disclosure of accounting policies under ICDS. So I would say that nil and not applicable would not be a correct reporting. And friends, I would suggest that like for significant accounting policies we have under the financial statements, I would also suggest and request that even for these 8 standards over here, where disclosures are required, kindly form a template and ensure that proper reporting is being done under 13F. Like I said that, nil not applicable in future might throw up some report in the income tax processing system and queries might be sent. And here you would say that against 10 ICDS, why only 8 are there? Is it a mistake on the part of the drafting? Then I would say no, because there are 2 standards. As you can see from here, ICDS 6, which is on Forex, and ICDS 8, which is on securities, that under those ICDS, no disclosures are required and therefore they are not covered over here in this table. So my request is please ensure that we do the correct reporting. These are the 10 ICDS against which the corresponding accounting standards have been mentioned. So I believe that this is something which everybody is aware of. ICDS 1, significant accounting policies. Friends, I have been told that by 11 o'clock I should end and have about 10-15 minutes of Q&A. So what I will do is that I have some illustrative examples on various ICDS. I would try to cover them first because I feel they are more relevant and important, and these presentation I would be sharing. These gap differences between AS and ICDS, you would be able to read from a lot of material, or even this presentation that I would be sharing with you, that would be available to you. So what I'll do is I'll go through some of the illustrations and areas where I feel that the impact can be there. So I'll just yeah, so friends, I have an Excel file on the screen. In fact, I would have loved that this presentation would have been made with all of you on a face-to-face basis. But as we can't. As long as we are interacting, I feel that is good enough. Right. So we already have. So I'll just start on the first with respect to the mark-to-market losses. Friends, ICDS 1, what it says is that M2M loss, otherwise than what is permitted under ICDS 6, that is on Forex, that is allowed. Other than that, that is not allowed. So I'll just give some background and then we'll run through this Excel file. So let us say that a company has a import, export, or foreign currency transactions which it has hedged. So what ICDS 6 permits and what it does not permit. So what it permits is a normal foreign exchange hedging transaction which a company has entered into. What it does not permit is my MTM loss, a mark-to-market loss relating to forward contracts if they are not speculative. That is, speculative M2M loss is not allowed, and contracts entered into firm commitments or highly probable forecast transaction. Those who have clients under who are dealing in foreign currency transactions would know that RBI permits that if you have an export order, you have not done the actual export, you have an export order, that on that basis also you can do enter into a hedge, right? So that is a firm commitment or a highly probable forecast transactions, and that is permitted. So what when you do is in accounting, when it comes to accounting, that export or import transaction has not been recorded, whereas you have entered into a hedge transaction. So normally when we record a export and import and we have a corresponding hedge, then what happens that on the export or import or on the receivable or payable, you would have a restatement that you would do as on the year end, as well as you would do book a mark-to-market gain or loss. So normally a hedge, as you are all aware, is to offset the loss on one hand with a gain in the hedging or vice versa. So in that, more or less, your P&L, if it is a perfect hedge, it would get knocked off and there would not be any impact on the P&L. However, where it is a speculative transaction or it is a highly firm, like I said, that you have a purchase order, or a sales order, you have not actually entered into the transaction and you have not done the accounting, whereas you already done the hedge against it. So in such all these situations, the MTM loss is not allowed under the ICDS. So what would be and see, we also, I would say, being in Gujarat, Vadodara, we have many clients who do the futures and options in the stock market, not on commodities, but even on the equities, the Nifty and everything. So even those are where M2M gains or losses are being booked. So I will take one such example, and then if you have any queries, we will take it up at the end of the session. So this is a contract or a transaction. So I am taking an example with respect to a stock market transaction, which can be applied even in case of a normal, otherwise the hedge transactions where M2M is not allowed. So let us say on 26th of March, the client has purchased 1000 quantity of whatever it might be at a rate of 15 rupees. Right, so the total amount is 15,000. Now you are all aware, those who have such clients or those who themselves do the F&O and all, that at the day end there is a mark-to-market which happens automatically as per the SEBI and the stock exchange directives. So at the day end, let us say the price of that was 16 rupees. So I purchased at 15 rupees, it is 16 rupees. Now when you look at the ledger of the client in the broker's book, it is not 15,000 that would get accounted for. It is just the 1,000 that would get accounted for. 1,000 is the gain of 15 to 16 that would get a credit in the balance of the broker. And then next day, again 16, it is a brought forward value. Then there is no transaction that happens. So 14.5 is the day end rate at which the mark to market is being done. So this 1.5 on this day, the client has incurred a loss of 1.5 rupees for that 1000 quantity. So 1500, it gets debited to the client ledger in the broker's book of account. So this way it continues on a daily basis. So let us presume in this case, hypothetically, that the client has not squared off the contract or the transaction as at 31st of March. And then what happens is that on a daily basis, this gain or loss gets accounted for. And finally, at the rate on 31st of March or 30th of March was 12 rupees. So on a purchase of 15 rupees, the M2M at the year end happens at 12 rupees, which means there is a loss of 3,000 rupees. Now, when you do the accounting, because under AS1, accounting standard 1, we have to follow conservatism, we have to follow prudence, and therefore we have to recognize all the losses that have happened. So in our books of account, we will have a loss booked for rupees 3,000 rupees. Now this 3,000 as per ICDS 1 is not permitted. So what happens is that when you are doing your tax audit, under clause 13E under ICDS 1, you will show an increase in profit of 3,000 rupees because that loss of 3,000 rupees that the client has booked in the books of account is not permitted under ICDS, and therefore you would recognize this 3,000 rupees as a increase in your profit, or I would say client's profit. Now, when we go to the computation of income, what would be the impact? So as per P&L, you have a loss of 3,000 rupees because we have to book that as per accounting standards. Under your clause 13E, you have shown an increase in profit. So you would add a 3,000 rupees by way of ICDS adjustment in your computation of total income. And then you would have a taxable income, which is zero because there is no gain or loss that needs to be accounted for tax purposes in year one. Right? So this is what is the adjustment that would be required under ICDS for year one. Now we go to year two. In year two, let us say, so 12 rupees what I brought forward, and on the 3rd of April, the actual transaction, the square off happens at a sale of 14 rupees. So original purchase was at 15 rupees, and finally it got squared off at 14 rupees. Thereby there is a loss of 1,000 rupees on a real basis, on a real income basis. Now when we look at the ledger of the broker with respect to our client, on day 1 from 12 to 13, so there is a credit of 1,000 rupees. On day 2, from 13 to 14, an actual square off, again there is a credit of 1,000 rupees. So from a balance of 3,000 rupees, the 2,000 profit, and therefore there is a final debit of 1,000 rupees that is payable to the broker. Now in the year 2, how do we do the accounting in the books of account? Right. So in the books of account, what I would be doing is that 3,000 loss, if you remember, we had already recognized in year 1. In year 2, we have a gain of 2,000 rupees, which we would recognize in the books of account. So in my books of account, if I take year 1 plus year 2, I would have a loss of 3,000, a gain of 2,000, and thereby having a total loss of 1,000 rupees, which is the actual loss that has been incurred. Now when I come to ICDS, clause 13E reporting, if you remember, in year 1 we had shown an increase in profit, which was it is a notional adjustment which we have to reverse in the subsequent year, right? So this increase in profit would become a decrease in profit in year 2. Now when I look at my computation, what would happen? I have shown a gain of 2,000 rupees as per my books of account, right? I would show an adjustment of 3,000 rupees as per ICDS, which is a minus 3,000 rupees. And therefore, in my tax computation, I would have the final 1,000 rupees loss recognized in year 2. So this is what is the difference when we talk to market, and this is how the reporting should be done with respect to the clause 13E of ICDS. And the impact that if we see overall in my books of account and my computation of income year 1 plus year 2, the impact is same of minus 1,000. But when I look on a year-on-year basis, there is definitely a difference, and therefore in such cases there is a postponement of loss that happens from a notional to an actual basis, and that is what is the ICDS or Income Tax Act requirement. Friends, I'll move to the next example. Like I said, I'll first cover all the examples, and then time permitting, I'll come back to the slides. The next is with respect to ICDS 2 and what we do as show as an adjustment to the inventory. The provisions of section 145A is applicable in case of goods and services both. Friends, I have made this presentation at a number of places, and what I understand is that members find it difficult to present the numbers under this particular clause as in ICDS as well as under the tax audit reporting. This was there even before ICDS. So I thought that let me share my views on how this should be interpreted and how this should be accounted for. So I am again taking an example. This is a pure trading entity. So I will I will not take very complex situations because we have a limitation of time. So in this case, we have an input GST per unit of 28,000 rupees and an output GST liability per unit of 42,000 rupees, right? So now in my normal accounting, what this case is that I have purchased 10 units at 1 lakh of rupees. and therefore I'm following normal accounting, which is the exclusive method of accounting where I don't recognize the, so my input GST, I will take it into my GST recoverable on the asset side, and my output GST, I would take it to my liabilities on, and whatever is the net amount, I'll either pay or carry forward the credit. But as far as my P&L is concerned, it would all be exclusive of the GST on which input credit is available. So I would show a purchase at 1 lakh rupees, which would amount to 10 lakh, my total. Let us presume that the sales have been done for 6 units at 1,50,000. So I will show, excluding my GST liability, 9 lakh rupees as my sales. And therefore I have an inventory of 4 units at 1 lakh rupees at cost, excluding GST, of 4 lakh rupees. And finally, I have a profit when I balance it off of 3 lakh rupees, which is 6 units sold into 50,000 per unit, which would be 3 lakh of rupees as my profit. Moving to 145A accounting. Now, this is where I would request everybody to kindly pay attention. Friends, my opening stock is nil. My purchase I will show including GST, because that is what is required under the inclusive method of accounting. So if you remember, I had said that my input GST is 28,000 rupees. So I would book at 12,80,000 rupees. Then I have my sales of 6 units where I had mentioned that output is at 42,000 per unit. So 42,000 I will include to that 1,50,000 of sale price, and I will recognize that 1,92,000, which is 11,52,000 rupees. Now I have an inventory of 4. So inventory of 4. So against this 42,000 rupees that I have included, I have also paid GST on sales, which I will show on the expense side for 6 rupees at 42,000, which comes to 2,52,000. I will show my inventory, which is including GST. That is what is the requirement under ICDS 2 as well as 145A. And therefore my inventory would be valued at 5,12,000. Now coming to this adjustment, which is where we need to understand that to the extent of the sales that I have done, I would be showing that I have utilized this input credit, which is at 28,000 rupees, and I come to 1,68,000. I will deduct this because this is with respect to my consumption, and I will show 11,12,000. I will come to a profit of 3 lakh rupees. Now friends, if you refer to the guidance note, the guidance note also gives an illustration, an example where it says that the effect on the profit would be nil, right? Now, let me explain that where I have, during my interaction with various participants, what I have understood is that where we are missing, I would say, the trick. So, when I'm saying this, this is the para 17.3 of ICDS 2 technical guide, where it says, so I'll first run through the table which is there given in the guidance note on tax audit. Going through the same example that we have taken. So since there was no opening stock, there will be no increase or decrease in profit. Increase in purchase of cost of raw material on inclusion of tax, duty, cess or fee. So 10 units into 28,000 per unit. I will increase my purchase price. Therefore, that would be that would result in a decrease in profit. So I have 2,80,000 as my decrease in profit. Increase in sales, 42,000 into 6 units. As my selling, so I would have 2,52,000 rupees here. Then what it says, tax, duty, cess or fee paid on the sale of finished goods as a result of its inclusion in sales. So this amount I will then show as a payment as a decrease in profit, 2,52,000. So this becomes my profit neutral. Then I say increase in closing stock of raw material on inclusion of tax, duty, cess or fee. So that 1,12,000 rupees, because I have 4 units in hand at 28,000 rupees. I have 1,12,000, which when I increase my closing stock, it has the impact of increasing my profit, and therefore I would show it as increase in profit. Now coming to the important aspect. Accounting of input credit availed and utilized on raw materials consumed in the payment of tax, duty, cess or fee on finished goods, accounted on the basis of raw material consumed. So this is why I have given in bold, accounted on the basis of raw material consumed. This is what I believe during my interaction that we are missing out. So I have to do the accounting on the basis of my raw material consumption of the input credit availed. See, normally in our normal books of account, what we do is that whatever comes in, we take credit. What people have seen that over here they show the adjustment of whatever is the balance of input credit lying in the balance sheet, that they try to show it over here, and then they say कि ये match नहीं हो रहा है, and whatever is the difference is offered for tax or taking as a deduction or whatever. Here, friends, I would just like to draw your attention that it is accounted on the basis of raw material consumed. So in this case, I have consumed 6 units, and on 6 units, my at 28,000 rupees input credit per unit, when I'm accounting on that basis, I will account for 1,68,000 rupees as my increase in profit, because that would be get adjusted against this, and my impact on profit would get knocked off. The increase would equal to decrease, and therefore in the computation of total income, my view is that there would be no impact that would be happening on this count. So again, I would request, yes. So you might say that sir, ये तो अभी इतना simple example है, आपने समझा दिया. Yes, I agree that in real life situation. But what I'm trying to say is that you need to understand this first, and also find that how on a client to client basis you can do it. So now if we look at how we are going to overcome this challenge, I understand ये जो 2,80,000 है, this we can always get increase in purchase cost of raw material. You can always get based on the credit that the client has taken in the electronic credit ledger under GST. Increase in sales of finished goods, तो ये मेरा जो output tax है उसके basis पे ये figure और ये figure आपकी आराम से derive हो जाएगी. Increase in closing stock of raw material. See here, what I would suggest is that when you are doing the closing stock valuation as on 31st of March each year, what I would suggest is that you can have the Excel file where you have a valuation which is excluding the GST, and add columns to that file where you have the GST rate on that particular raw material. You apply that rate and find the closing stock including GST. So your closing stock including GST minus your closing stock excluding GST which you are incorporating in your balance sheet, वो दोनों minus करने से आपका ये 1,12,000 आ जाएगा. And then what happens is that since you are not able to find on a consumption basis, what can happen, this can be your balancing figure with all these figures. See, since all these figures are on actual basis, this also being the balancing figure, but it would also be on an actual basis. So this is how I believe that under ICDS 2 we must report, and we should not say that the impact on the profit is nil, because this is what is the reporting that is required. And now I am just taking it further to year 2, that normal accounting अपना 1 lakh का जो था, opening stock we bring at 1 lakh rupees, that is sold at 150, so 4 units 2 lakh profit. This is as per our books of account, normal accounting. When I come to the ICDS or 145A accounting, I would have opening stock which is at including GST 5,12,000. I have sales which is again, like I said, including GST of 1,92,000, 7,68,000. ये जो मेरा 42,000 पे liability आया, that I will charge off as an expense as GST paid as an expenditure of 1,68,000. And again this 4 units, this 28,000 I would account my input credit on the basis of consumption, and I would have a minus 1,12,000 over here, and finally my profit would come to 2 lakh, which is the same which I am getting under my books of account. And similar reporting would happen under 145A or under, even I would say, as per ICDS. Here you have the increase in closing stock of closing in the opening stock of the tax duty sales. So 1,12,000 जो हमने यहाँ पे दिखाया था 0.5 में as a increase in profit, that next year would become a opening stock adjustment as a decrease in profit. And again I would have 168 as on my sales and the GST liability, GST paid, and finally the 1,12,000 which is getting adjusted at 2,80,000 and getting knocked off. So this is how 145A AS2 accounting should be done and disclosed under tax. Friends, I can see there are a few questions that are coming up. I would take them at the end, or let me just see if I can immediately Whether realized MTM loss is allowed as deduction in ICDS, I said that that is not allowed under ICDS 1. And under what situation that would not be allowed, I have already answered that. Does MTM losses of current year will have impact on alternate minimum tax in subsequent year? Like I mentioned, friends, that ICDS would have no impact as far as your MAT is concerned. So in your books of account, if you're booking the loss, yes, definitely your MAT or AMT would reduce to that impact, to that effect. But as far as your books of account are not required to be restated or redrawn. And also, I would say that with respect to MAT, there would be no impact as far as ICDS is concerned. As per 145A, GST input on purchase and GST liability on sales shall be taken from books or GSTR 3B return. What about difference in book input credit and GSTR 3B? Friends, I would just like to mention over here that finally what you are taking in your for your accounting purposes, see, ultimately over a period of time, it would get knocked off. So if whatever you are taking in your books of account, because you have to compare, I would say with your books of account and not with your 3B. So whatever is the adjustment between your 3B and your books of account, that also you would be reconciling or adjusting somewhere, because ultimately when we see all these are interlinked, if I'm showing the input credit, then even your purchase would get accounted accordingly, and your closing stock valuation would also get impacted accordingly, and your consumption would also get impacted. So ultimately it is a knocking off which happens. So I would say that whatever is there in your books of account, you have to take as per that. Sir, please explain about service inventory. ICDF is possible. How to calculate service inventory? So, friends, this service inventory I will take up in the end because there would be very some specific discussion that would be required on that count. I'll move to the next again on ICDS 3, which is the contracts. Friends, here I would say the major gap between accounting standards and ICDS. Friends, I have received a member has mentioned, please share the Excel file. I will definitely share the Excel file also, because the whole purpose of this interaction is to ensure that we do correct reporting. And I would be very happy if we are able to implement and do the correct reporting. So I'll share my presentation as well as the Excel file. Friends, we come to the construction contract, where the difference, I would say, is again on the conservatism and prudence. Friends, if you look at it, whatever we have discussed on ICDS 1 and we are discussing on ICDS 3 also, is that in accounting standards we have prudence, which is not there under the Income Tax Act. So what the accounting standard says with respect to contracts, and this would now hold good, when especially in this COVID situation, I would say, because many of the contracts would be, which are having a very less profit earlier because of COVID and cost overrun, time overrun, you might find them to be into losses. So what the accounting standard says, friends, is that whenever you have an estimated loss also on a contract, you have to estimate that and book that loss in your books of account. ICDS say no. You have to do, ICDS says you have to follow the POCM, percentage of completion method, and so the loss, you should also claim that on a percentage of completion method only. I would say these are not specific words, but this is what is we can understand from the requirement of ICDS. So now again, I'll go through an example that where and how it impacts. See, what happens, friends, these are all going to be timing differences. So what would happen is that over a period of time, when the contract finally completes, आपका final profit loss जो है वो actual basis पे आ जाएगा. But in between ये सब जो adjustments है ICDS में करने के, that we have to keep a track and we have to report also. So in this example, the estimated contract cost at the inception of the contract was 6,000 rupees. The contract revenue is 7,500 rupees, and therefore the contract profit was 1,500 rupees. So in year 1, March 19, let us say, कोई COVID नहीं था, कोई issue नहीं था. So what has happened is that 50% of the contract has been completed. Now, what you have done is that 50% of the contract in year 1, actual contract cost 3,000 आपका था against the estimated contract cost of 6,000. So you have on a actual versus estimate of 50% completion. So contract revenue आपका 7,500 जो था उसका 50% आप income में ले जाएंगे 3,750. Contract cost जो 3,000 है वो पूरा cost में ले जाएंगे. So then you have a profit of 750, which is also equal to 50% of my 1500 rupees. So इसमें ICDS में भी there would be no adjustment that is there, and therefore under clause 13E you will report in year 1 no increase, no decrease, कोई impact नहीं है, because my accounting standards and ICDS are at par. Now coming to year 2, let us say March 20 now, COVID आ गया, लॉकडाउन हुआ, कॉन्ट्रैक्ट कॉस्ट में अभी मेरा जो 6000 का था वो अभी मैं एस्टिमेट कर रहा हूँ 8000, बिकॉज आई हैव गिवन सैलरीज फॉर 2 months, मेरा काम हुआ नहीं है, तो देयर वुड बी अ एस्केलेशन. एंड माय कॉन्ट्रैक्ट रेवेन्यू तो सेम रहेगा, बिकॉज माय क्लाइंट हैज टोल्ड मी दैट भाई आई एम नॉट गोइंग टू पे यू एक्स्ट्रा because of COVID, ये वो whatever it might be, and therefore the gain of 1500 would now result into a loss of 500 rupees. So this is what is my revised estimate after year 1. Now let us say in year 2, my total cost that has been incurred is 5000 rupees. So year 1 में 3000 था, बाकी 2000 का काम हुआ, 5000 का हुआ. Now my percentage completion, friends, I'll do a F2 so that you can see the link of the formula. 5000 divided by 8000, my revised cost now. So now my percentage completion is 62.5%, right? So my cumulative contract revenue at 62.5 on 7,500 would be 4687.50. This is what would be my cumulative contract revenue, of which 3750 I've already recognized in year 1. So my year 2 ये दोनों का difference आएगा, which is 937.50. My contract cost incremental 5000 minus 3000, मेरा 2000 का contract cost आया. Now estimated loss on contract मेरा total 500 है contract का. So what would happen is that at 62.5%, 187.5 is what is my contract loss which I have to book additionally. So 62.5 का जो loss है वो इसमें आ गया है मेरा. जो balance है 37.5%. Now the standard says that because you have an estimated loss on prudence, that loss also you book in the year in which you have estimated that, or it is a known loss now. So now this 187.5 मेरा यहाँ पे additional में I will book under the books of account. So my total contract profit for year 2, if you see, it comes to 1250 का मेरा loss आता है. Now 750 loss gain I had already recognized. I am just trying to reconcile कि भाई मेरा बराबर आ रहा है कि नहीं. 750 year 1 में मैंने profit book किया, 1250 loss मैंने year 2 में book किया, which means मेरा total जो loss है वो 500 2 साल में मेरा recognize हो गया under accounting standards and books of account. Now when I come to ICDS, ICDS says no, this is not permitted, right? So what I will do, contract revenue remains same. My contract cost 2000 जो है वो same रहेगा, which is permitted under ICDS. Now this 187.5 which I had recognized under prudence as per accounting standard is not permitted under ICDS, and therefore I will not have that, and I'll have a final loss under my tax or under ICDS of 1062.5. So what I will do as an auditor, see I have not to show this, मेरे को books of account तो recast करना नहीं है या वापस बनाना नहीं है. So I will show this 187.5 का adjustment as an increase in profit in clause 13E of ICDS under ICDS 3. Now if I looked at my computation, friends, तो कैसे ये adjust आपको पता चलेगा. 1250 is as per my books of account that I had shown a loss. I will show an increase in profit from my tax audit report into my computation. I will bring 187.5. And finally, I will have a taxable loss or a loss of 1062.5 as per my computation. So this is how this adjustment would happen. So this clause 13E, friends, that is I'm saying this reporting becomes very, very important, because even in the ITR, it captures this number directly into this. So you can't have any manual adjustment to that. Now we move forward. Contract year 3 में खत्म हो जाता है. तो मेरा फाइनल 8000 का जो एस्टिमेटेड कॉस्ट था उसके बेसिस पे आई हैव इंकर्ड दैट कॉस्ट. माय परसेंटेज कंप्लीशन इज 100%. क्यूमुलेटिव रेवेन्यू इज 7500. सो आई हैड ऑलरेडी रिकॉग्नाइज्ड रेवेन्यू इतना फॉर ओवर 2 years. द बैलेंस आई विल रिकॉग्नाइज बिकॉज नाउ इट इज 100% कंप्लीट इन ईयर 3. माय कॉन्ट्रैक्ट कॉस्ट जो था 8000 माइनस 5000 आई हैड ऑलरेडी रिकॉग्नाइज्ड इन अर्लियर ईयर्स. आई रिकॉग्नाइज 3000 रुपीज. एस्टिमेटेड लॉस ऑन कॉन्ट्रैक्ट जो मैंने यहाँ पे बुक किया था, यहाँ पे नाउ आई विल रिवर्स, बिकॉज इसका जो लॉस है मैंने बाय वे ऑफ प्रूडेंस ये जो लॉस है मैंने ऑलरेडी यहाँ पे दिखा दिया है. सो आई कैनॉट शो दैट लॉस अगेन ओवर हियर. सो इफ आई लुक सी फ्रॉम ए accounting, see friends, मेरा एक habit है, कुछ भी होता है I go into the journal entry or the basic elementary entry कि भाई इसका क्या entry आएगा, उसके basis पे it becomes much clearer. So if I look at year 2, 187.50 का मेरा entry क्या रहेगा, I will have a P&L debit because it is a loss, and then I would show a credit in my balance sheet because that loss, मेरा कोई ये cash loss या ऐसा तो है नहीं, it is a notional on prudence that I am showing that loss. So I will debit my P&L and I will credit the estimated loss on a contract, which is as a liability. I will park it in my balance sheet. Now in the year 3, what I will do, वो जो liability 187.5 खड़ा है, वो entry में reverse कर दूंगा. I will debit that estimated loss in the balance sheet and I will credit the P&L. So ये P&L मेरा credit होता है जिसके basis पे year 3 में मेरा profit or loss as per books of account has become 0. Which means that क्योंकि ये 187.5 मैंने यहाँ पे recognize कर दिया है तो यहाँ पे ये 0 हो जाएगा. Coming to ICDS, I will show my revenue, I will show my cost, what I have done, and मेरा यहाँ पे आएगा loss 187.5. So you can now clearly understand because this was not recognized in year 2, this gets recognized in year 3. और मेरा ICDS reporting, ये जो मेरे को है increase in profit, in ये मेरे को decrease in profit यहाँ पे दिखा. Friends, I'll just put up a word of caution कि हमारे ऑफिस में बहुत बार क्या होता है, हम लोग कॉपी पेस्ट करते हैं, तो काइंडली इंश्योर कि ये कॉपी पेस्ट वो ड्रैग ड्रॉप करने में इंक्रीज इन प्रॉफिट का इंक्रीज इन प्रॉफिट नेक्स्ट ईयर में नहीं हो जाए, अदरवाइज यू विल एंड अप पेइंग मोर टैक्स फॉर द क्लाइंट और आइदर टेकिंग मोर लॉसेस व्हिच माइट be not be in accordance with law and be subject to a lot of scrutiny and penalties or whatever. Then please ensure कि आपका increase in profit of 1 year becomes a decrease in profit of the next year and vice versa. So ये net effect, I go to my computation, तो मेरा profit as per books of account is 0. ICDS adjustment यहाँ पे आया and 187.50 का यहाँ पे मैंने recognize किया. So this is how the loss with respect to construction contracts and ICDS 3 is required to be done. So this is with respect to ICDS 3 on construction contracts. Any questions? We can definitely take it up now or in the end. I'll run through all the questions in the end. Another thing, friends, I would say is that, see, now when I'm on this, what would happen, friends, is that there would be contracts which would be running over 4 years, 5 years. So it is very, very important that such type of sheets is maintained contract wise, because one contract would have a profit, another contract would have a loss, and so you have to keep a track कि भी किसका originate कौन से साल में हो रहा है ICDS under clause 13 ही ICDS 3 में, and उसके subsequent year में reversal हो रहा है, फिर create हो रहा है, reversal हो रहा है. So you have to keep a track contract wise to ensure that whatever, because if you see यहाँ पे client is suffering the loss, and if you don't do a reversal in the subsequent year, then ये जो loss का benefit फिर client को नहीं मिलेगा. Coming to the next ICDS 6, this is with respect to forex. I would say the impact over here as such, it has the impact with respect to the borrowing cost. I'll just give the principle first. I'll explain the principle. What the accounting standard says, it is para 4E of AS 16. Sorry. What it says is that when you have taken a foreign currency loan, a borrowing in foreign currency, then what happens is that under ECB loan, normally your rate of interest is marked to the foreign, the LIBOR or the MIBOR or whatever it might be, which might be, let us say, 2%, 3%. If that same borrowing you would have done in India, you might have paid 9% or 10%, and therefore you are saving on the interest cost by paying less amount of interest. But at the same time, you are getting exposed to foreign exchange fluctuations. So what para 4E says, because I have, again, to be very honest, I've seen many of our friends who have not, who are, I would say, ye yaad nahi raha hai, and they have missed out on this accounting. So what 4E says that आपका जितना saving हुआ 9% or 3% में interest saving, to that extent अगर आपका forex loss है, तो आपको वो forex loss you have to consider as part of your borrowing cost. So you have to reclassify from a foreign exchange loss into a interest cost or a borrowing cost. So ये उसी का example है. And so what happens is that ICDS does not recognize such a reclassification, and that is where the impact comes. So let us say I have taken a ECB of 500,000 US dollar, and the rate of interest is 6% on this ECB. Same amount if I would have borrowed in India, I would have paid 10%. Exchange rate on the date of loan is 65 rupees, and exchange rate on the balance sheet date, that is the closing, it's 72 rupees. So my loan in INR on the date when I've taken the loan at 65 rupees is 3 crore 25 lakhs. And at the year end, the restatement is at 672 rupees. I have not done any repayment during the year, so that is still outstanding. So मेरा 3 crore 60 lakhs हो जाता है at the end of the year, by which I have an exchange loss of 35 lakhs. Now, friends, if I look as per my books of accounts, taking para 4E, when I'm taking the loan, I will take a loan at 325. I have paid interest at 6% on this. So I will pay interest at 19,50,000. I will debit that. Now, at the end of the year, I have a forex loss of 35 lakhs, which was this, which we discussed. So now what would happen? Interest to the extent of the difference between these two. So मेरा अगर 6% पे मैंने interest pay किया है, if I would have paid at 10%, then what would have been my interest cost? ये दोनों का जो difference है, this I will classify from forex to interest. So out of this 1950, मेरा forex जो है वो this इंटर मेरा forex जो 35 है, 35 lakhs से मेरा 13 lakhs will from forex would have reclassified to interest. So मेरा total जो है expense on the statement of P&L, my total interest is at 32.5, which is this and this after reclassification, and my total forex loss becomes 35 minus 13, 22 lakhs, which is 54 lakh 50,000. Now, like I said, there is nothing like this para 4E or restatement under ICDS, and therefore you have the actual amounts of 19 lakh 50,000 as your interest and forex as 35 lakhs. Total P&L impact is nil. बट इसका इम्पैक्ट कहाँ पे आएगा? आपका जो बोरोइंग कॉस्ट है, वो जो कैपिटलाइजेशन आता है ICDS 9 में, because here you once you classify it as an interest in your books of account and you are having any qualifying asset, you would capitalize that, and which is not there under ICDS, and to that extent there would be a difference coming, and which has to get reported under ICDS 6. Friends, we move on to the next standard, which is with respect to securities. And friends, again, I would like to draw attention that this is with respect to securities which are held as stock in trade, not as security. अगर आपने subsidiary में या वहाँ पे कहीं पे investment किया है, joint venture, associates or any long-term securities, then it would not impact. These are those which you are showing as securities held as stock in trade. Again, I'll first explain what is the major difference. The major difference is that the accounting standards wants us to make a line by line cost or NRV, whichever is lower. That means security wise. So if I have an investment in equity shares, I have 4 equity shares which I have invested in. Then for each equity shares, I have to see whatever is the gain or loss I have I have to ignore, and loss I have to account for on prudence. What ICDS says that you have to see as a category wise. So if you have investment in mutual fund, that whole category का total करके आपको gain या loss है वो देखना है. Loss है तो आपको ICDS में ले जाना है, gain है तो आपको नहीं ले जाना है. So that I will explain by way of illustration or an example. That in this case, let us say that a client of ours has investment in mutual funds. Again, these are the short-term mutual funds held as stock in trade, and investment in listed equity shares. So these are the two categories. Fund A, B, C, ये quantity है, ये rate है, ये amount है. So this is the cost. Now let us say 31st March 2018 ये purchase किया था, तो अब मेरा जो closing rate है as on 31st of March, ये closing rate है against this purchase rate. And now whatever is the amount, this is the closing amount that we have. So sorry, I have ये decimals का issue है. Let me just correct that. Yeah. So what this says is that now I have to do a script wise. ये मेरा year end में 5025 है against a cost of 5000, so I don't recognize that gain. ये 10,000 के सामने मेरा 9,500 हो गया, 500 का लॉस मेरे को बुक्स ऑफ अकाउंट में लेना है. ये मेरा 15,000 के सामने 18,750 हुआ, ये गेन आई इग्नोर. So that means what I will do is against 500 rupees I will book as a loss in my books of account. What ICDS says कि आपको इसको ये टोटल और ये टोटल को कंपेयर करना है कैटेगरी वाइज. तो इसमें ये जो है आपका 30,000 रुपीज, ये टोटल जो है आपका कॉस्ट और ये जो है आपका 31 मार्च का, ये दोनों को कंपेयर करना है एंड विच एवर इज लोअर. तो सिंस ये 30,000 है मेरा ICDS में, आई विल कैरी एट 30,000. I move to the next category on equity shares. Again the same thing, I do a line by line as per my books of account as per accounting standard, and I book a loss of 61,000 rupees. For ICDS purpose, 7,51,000 I will compare with 7,15,000, which is the total market value as on 31st of March for that category, and there I have a loss of 36,000 rupees. So now when I come a total, मेरा जो books of account है उसमें I have booked a loss of 61,500. Under ICDS I have booked a loss of 36,000. Now, so again coming to clause 13E of our tax audit, ICDS 8, we have to report that 61,500 जो मेरा books of account का जो loss है वो मैं ignore कर रहा हूँ. I will have to disallow that. And मेरा जो ICDS permit करता है वही मेरे को allow करना है, 36,000 I will allow. So I will have a net effect of 25,500 under my tax audit reporting or under 13E of the ICDS or tax audit. So now if I go to computation, मेरा books of account के हिसाब से 61,500 का मेरा loss था as per this. So I will show that as my starting point in my computation. ICDS adjustment मेरा 25,500 आया, and therefore finally I have a minus 36,000 which is there, which is as per ICDS, which I will have. Now year 2, again there is some movement which is happening. तो ये मेरा लॉस आया ये वाले स्क्रिप्ट में, ये वाले में again it has got restored. So friends, you would remember the accounting standard says that if you have a loss and subsequently there is increase, then you can recognize that reversal of loss, but only to the extent of your cost. You cannot book a gain beyond that. तो ये मेरा 10,000 हुआ, तो इसका मेरा 500 का मैंने बुक किया, तो ये मेरा 00 हो गया as per books of account. So when I go to ICDS, again this is 39,500 against which I have to compare 30,000. And I will take as 30,000. In my shares, again there is this script-wise movement that has happened, so by which I have recognized a total loss of 4,000 rupees in my year 2, March 19, और मेरा total value 7,50,000 है, जो 751 के साथ मैं compare करूँगा. So when I look at my P&L, I have a total loss of 4,000 which I have shown, and on the ICDS front, when I compare to last year, so last year ka 745 now becomes my cost. Against that I have 780, and therefore I will recognize a gain of 35,000 rupees. Now when I go to, again I would say the reporting under clause 13E, मेरा इस साल का जो loss है as per books of account, that I will show as a adjustment. I will ignore that, I will reverse that, and whatever is the actual amount that I am getting under ICDS 35,000, I will show that impact, and my net effect would be 39,000 as per this. और ये जो लाइन है लास्ट ईयर का जो नोशनल एडजस्टमेंट किया था फ्रेंड्स, आई विल हैव टू शो दैट आल्सो एज अ रिवर्सल इन ICDS. डोंट फॉरगेट दिस, अदरवाइज ये इंपैक्ट लेना रह जाएगा, तो आपके क्लाइंट को ये लॉस होगा, बिकॉज देयर इज अ लेस अमाउंट ऑफ लॉस दैट इज परमिटेड इन द अर्लियर ईयर एंड दैट वी आर एडजस्टिंग ओवर ईयर. सो बाय वे ऑफ कंप्यूटेशन व्हाट इज हैपनिंग इज, आपने 4,000 का आपने लॉस दिखाया था, आप ICDS एडजस्टमेंट ये दोनों साल का ये रिवर्सल और इस साल का एक्चुअल करके आप 13,500 करके you are showing a taxable income of 9,500 against a loss of 4,000 rupees in year 2. In year 3, friends, we are assuming for simplicity that all the securities, all the shares are sold at cost price. Cost price पे मैंने सारा बेच दिया है. So there is no profit, no loss. So whatever I had booked as a loss in year 2, मेरा actual sale पे ये सब reverse हो जाएगा. This I have taken is just for simplification and understanding. So what would happen in year 3? So all the profits and loss in my books of account are now on a real basis, on an actual basis. Therefore, there is nothing that is a mark to market sort of a thing that is being carried forward, and therefore under ICDS there would be no adjustment happening in year 3, क्योंकि मेरा कोई carry forward position नहीं है. And therefore इसमें मैं क्या करूँगा, 13E के रिपोर्टिंग में मैं जो लास्ट ईयर का जो है ये वाला 4,000 and 3,500, you remember friends, we have to reverse that in year 3. Although इस साल मेरा ICDS का adjustment नहीं है, but मेरा last time का जो notional था उसको मेरे को इस साल reverse करना है. So as per my books of account, I am having 65,500 as my gain. ICDS adjustment is 39,000. So in year 3, I will be showing a profit of, instead of 65,500, which I have shown in the books, I will be showing 26,500 in my computation. So if I look at all the 3 years taken together, if you remember, we had our purchase price और जो final selling price है वो दोनों same था. Therefore, there is no profit, no loss. So if I take all the 3 years together, as per my books of account, यहाँ पे देखिए मेरा sum आ रहा है 0. I'm just reconciling. I'm just trying to make you understand कि over a period ये 0 होना ही चाहिए. These adjustments under ICDS, whatever I'm doing, are also 0, and my final जो है मेरा as per taxable income भी अगर आप देखेंगे तो इसका sum भी 0 आ रहा है. But year on year, मेरा जो earlier year का loss था as per books under ICDS, that gets postponed to the year in which the final square off or the final settlement of transactions happen. And therefore, this is what is the one example of adjustment. Friends, like I said, the topic was with respect to SMEs and SMPs, and I believe that see some of these things you would find in the balance sheet. And if you remember, I had mentioned earlier that अगर टैक्स ऑडिट नहीं भी है और ऐसे ट्रांजैक्शंस आपके क्लाइंट के बुक्स में है, then please as a consultant, as a income tax return filer, I would say, ensure that if these adjustments are there, kindly disclose in the return of income. Now friends, coming to ICDS 9, and let me tell you, this itself can be a session, but हम लोग वो जैसे गेम्स खेलते हैं, आई नो वी वुड हैव डन अ लॉट ड्यूरिंग दिस लॉकडाउन एंड दिस टाइम, वो लेवल 1, लेवल 2, लेवल 3 वो ज्यादा कॉम्प्लिकेट होते जाता है. सिमिलरली आवर मूवमेंट फ्रॉम ICDS 1 to ICDS 9 is also very similar, and ICDS 9 on borrowings is very complex, and I believe that in a majority of the cases where there are borrowings, there would be some sort of an adjustment that might come in the by way of ICDS adjustments in the computation. And friends, like I said, सब electronic processing हो रहा है, और जहाँ पे भी you never know, the department might just link up that you have a borrowings or you have a fresh borrowing. Now that the scope of even STP and all those things is increasing, STF and everything is increasing, you might find the income tax department mapping कि भाई नया borrowing कुछ लिया है और ICDS adjustment है कि नहीं है. अगर it is nil, then please throw up a notice or a query or a inquiry, whatever. And therefore, it is important that we understand this ICDS 9 adjustment. So what are the steps? It is, like I said, it is not as simple as the earlier ones. I'm not saying the earlier ones were simple. So first is you have to identify qualifying assets as per ICDS. Friends, qualifying asset as per ICDS, the definition is different from qualifying asset as per our accounting standard. Qualifying asset as per ICDS, what it says, see, our accounting standard says that anything more than 12 months would be a qualifying asset. Whereas ICDS, it does not say that. What it says is that if you have an inventory or any such thing which is more than 12 months, but that is again in case of general borrowing, it is not there in case of specific borrowing. So therefore, first you need to understand the difference between qualifying asset as per ICDS and qualifying asset as per AS, and you identify the qualifying assets as per ICDS. Then the next question you should ask as a flow is that whether the qualifying assets are purchased from borrowed fund or from own funds. If it is from own funds, then definitely ICDS 9 would not apply. If it is from borrowed funds, then the next question you ask is that if then whether it is same out of specific borrowing or general borrowing. Specific borrowing would mean जैसे हम लोग term loans लेते हैं या vehicle loans लेते हैं, which is against that particular asset, or it is out of general borrowing like a cash credit or something like that. So that you need to identify. So, and borrowings would not necessarily, friends, mean borrowings only from the banks or the NBFCs. Even if you have taken private loans from friends, relatives or whatever, even that is classified as borrowing. आप जिस पे भी interest payment करते हो वो borrowing हो जाता है. So then you have to, next step is where you have to classify whether it is a specific borrowing or a general borrowing. After that, you have to trace that whether the qualifying asset, if it is acquired from specific borrowing, then the entire interest is to be capitalized from the date of funds borrowed till the date asset is first put to use. Now, this is where, friends, I will tell you there is a difference between the AS and the ICDS. That under ICDS, any asset more than 12 months you can ignore. So, कहाँ पे impact आ सकता है इसका मैं आपको एक simple example देता हूँ. Let us say my client has purchased a car. उसने Mercedes purchase करी है, which is expensive. So he has gone for a loan. Now उसने loan लिया. Now we all know that in such cases that only after you make the full payment that the car gets released and you can put it to use. Therefore, there is a time lag between the borrowing and the asset put to use, where the borrowing precedes the asset put to use. अभी तक AS में हम लोग बोलते थे vehicle does not trade more than 12 months, so nothing would be capitalized and everything should be charged off to PM. Now this is a case of specific borrowing क्योंकि मैंने वो गाड़ी के against ही loan लिया है. Now if you look at this, the provisions of the ICDS 9, it says that the entire interest is to be capitalized from the date of the funds are borrowed till the asset put to use. So आज अगर मैंने borrowing किया है और मेरे 10 दिन बाद vehicle आता है, तो under ICDS 9 the interest for these 10 days would need to be capitalized under ICDS 9. That is what is my interpretation of this particular clause. And therefore, like I said, that we have to understand, we have to categorize the qualifying asset according to the ICDS 9. If the qualifying asset is acquired from general borrowing, so ये specific borrowing का हो गया. Now if it is acquired from general borrowing, then only those qualifying asset will be considered which take 12 or more months. So 12 or more months का यहाँ पे आता है फंडा general borrowing में, not in case of specific borrowing. So those qualifying asset which will be considered or which would be considered are those which would take 12 months or more for acquisition, construction or production. And after that, the formula as mentioned in para 6 is to be applied to calculate the borrowing cost to be capitalized. So general borrowing जब अगर आपने समझिए cash credit में से या कुछ भी आपने लिया है या general borrowing है, so in that case you have to see कि भाई वो asset का 12 months का acquisition है कि नहीं है, then nothing is to be capitalized. ICDS 9 would not apply. If it takes more than 12 months, then you have to use the formula as per para 6 of ICDS 9. After computation of borrowing cost to be capitalized, in case of general borrowing, the same needs to be allocated amongst qualifying asset on the basis of funds utilized and the period for which the same are utilized. तो आपने फिर पूरा एक ब्लॉक का आपने because it is a general borrowing, आपने find out किया कि मेरा total जो है मेरे को जो total interest capitalization है is X amount on the general borrowing for qualifying assets more than 12 months. Now that total X amount, if you have 4 such assets which are qualifying assets, then the total interest to be capitalized, then you have to allocate on the 4 assets in accordance with ICDS 9. So now we'll go through this example. In this case, machinery is purchased किया है A, B, C, D. These are the 4 machines that have been purchased. Purchase cost है इसका 1 करोड़. A का borrowing 1 करोड़ का है and it is a specific borrowing. B का these are the purchase values. Borrowings जो है मेरा purchase values का total है 82 lakhs, but I have a general borrowing of 1 crore. And I have acquired these 3 BCD from the general borrowing. My date of purchase of machinery is May 17. The loan I have taken is on 15th April. So this precedes this date, like we took in that example. यहाँ पे date of purchase April 17, Feb 17, October 17 है और loan is taken in on June 17. Date of payment to vendors, again these are the 4 dates. Date put to use, these are the 4 dates. This is the rate of interest. Repayment as on 31st March 18, कुछ भी नहीं हुआ है, no repayment has been done. So my interest cost I have worked out by way of formula. This is what is my interest on the specific borrowing. This is what is my interest on the general borrowing. और टेम्पररी मैंने फंड्स पार्क किए थे 77,260 क्योंकि ये बोरोइंग मेरे पास 1 करोड़ का आ गया था. देयर वाज अ गैप and I parked in some fixed deposit that gave me 6% then, and therefore this is the interest that I have earned on that. So if I say qualifying asset under AS 16, ये तीनों qualifying asset है, delta qualifying asset नहीं है. Why? Because October 17 है मेरा date of purchase of machinery और put to use date है January 18. So in a span of 4 months I have put to use, therefore AS 16 में भी नहीं है, and because it is out of general borrowing under ICDS 9B, ये मेरा delta जो है is not a qualifying asset, whereas in all the other cases, because it has taken more than 1 year, Feb 17 to March 18, April 17 to March 18, 1 year है, तो ये मेरा सब qualifying asset में आता है. Now effect on borrowing cost for alpha. Interest to be capitalized 9,61,000. ये जो मेरा amount है, I had said ये पूरा का पूरा capitalize होगा under ICDS, but under AS I will capitalize only 961 minus ये जो कम आ रहा है is because I have taken credit of temporary parking of funds. Under ICDS it is not allowed. That credit to borrowing cost is not allowed. You have to offer it for income separately, this 77,260. And here also you are offering it for income, but on a netted basis. So 884 is what you have be capitalizing under AS. Whereas here under ICDS you are capitalizing the full value. This 77,260 you are not allowed to capitalize. So here also friends, why I am capitalizing is because मेरा purchase May 17 का है, put to use है May 18. It is more than 1 year. So these are qualifying assets under both, and therefore it would get capitalized. Now coming to BCD. D we said is not a qualifying asset. B मेरा payment date है August 18, put to use date है March 18. तो यहाँ पे मैंने put to use के बाद मैंने payment किया है. That means मेरा कोई fund put to use के पहले deploy नहीं हुआ है, borrowed fund for the purpose of this asset, and therefore there is no borrowing cost that is to be capitalized. Under AS 16. For C, this asset I had purchased on September 17. I have made payment for that on September 17, and I have put to use in March 18. So I have deployed funds for 183 days in this case, and at the borrowing cost rate of 12.5% on general borrowing, I would have an amount to be capitalized of 1,88,014. At 12.5% for the number of days that I have utilized. This is as per accounting standard. तो ये जो मेरा total cost था 10,41,000 general borrowing का, उसमें से 188 is what I would capitalize and 853 would be charged off to P&L as per my accounting standard. Now I come to ICDS. Now ICDS में we have identified that B and C are the qualifying asset. There is a general borrowing. So now there is a formula for ICDS under clause 6. I will just right. I will just do the screen share to my PPT so that we are first able to understand the formula, and then we'll go back to the working. How much time do I have? 11. Oh, it's already 11. Friends, A into B by C. This is what is the formula given in ICDS 9. So what is A, which is borrowing cost incurred during the period? We are talking of general borrowings. So ये मेरा borrowing cost का आएगा. B is after excluding qualifying asset funded from specific borrowing. So this is the total borrowing cost incurred. उसमें से B में से I will minus that. What I will do, 1, 2, 3. Average of costs of qualifying asset as per balance sheet on first day and the last day of previous year. So now I am talking of qualifying asset under my general borrowing. This is formula for capitalization of borrowing cost on general borrowing. So average of cost of asset as per the opening and closing first day and last day. If the qualifying asset does not appear in the balance sheet on the first day of the previous year, then half of the cost of the qualifying asset. तो मेरा ओपनिंग क्लोजिंग दोनों में है तो मैं उसका एवरेज लूंगा. ओपनिंग में नहीं है, क्लोजिंग में है, तो उसका मैं 50% लूंगा फॉर द पर्पस ऑफ दिस फॉर्मूला. एंड if qualifying does not appear in the balance sheet on the last day, then I will take the average of the cost as appearing on the balance sheet on the first day and on the date put to use or completion. तो क्लोजिंग में नहीं है तो फर्स्ट डे और पुट टू यूज के जो अमाउंट है उसका जो है एवरेज में लूंगा. So these three are the amounts that I have to consider under B. And C is the average of the amount of total assets as appearing, total assets. Now it is not talking of qualifying asset, total assets as appearing in the balance sheet on the first day and the last day of the previous year other than those directly funded out of specific borrowing. फ्रेंड्स ये पूरे में से स्पेसिफिक बोरोइंग और उसका एक्सक्लूड किया है क्योंकि उसका इंटरेस्ट कैपिटलाइजेशन अलग से लिया जा रहा है. तो ये जनरल बोरोइंग का जो है सी में. सो व्हाट यू हैव टू डू इज ए इंटू बी बाई सी. सो नाउ वील गेट बैक इनटू आवर एक्सेल शीट. सो नाउ इफ आई लुक फर्स्ट इज एवरेज ऑफ द कॉस्ट ऑफ क्वालिफाइंग एसेट. तो ये मैंने एक बैलेंस शीट बनाया है, मेरा ओपनिंग बैलेंस शीट. I'll just look at my capital work in progress is of 30 lakhs Charlie because ये Feb 17 में मेरा date of purchase है. I have purchased 30 lakhs और पेमेंट उसका है मेरा March 17 के बाद है. तो यहाँ पे मैंने क्रेडिटर दिखाया है और बाकी सब I have taken hypothetical numbers. Subsequently in the next year March 18 बैंक है. मेरा मशीनरी जो है as per books of account it is capitalized. मेरा बीटा चार्ली डेल्टा जो है ये तीनों मैंने कैपिटलाइज किया है. प्लस मैंने कैपिटलाइज किया है E37 विच इज 1,88,000. इनका जो बोरोइंग कॉस्ट है मेरा कैपिटलाइजेशन के टाइम दैट आई हैव कैपिटलाइज्ड ओवर ईयर. और ये मेरा कैपिटल वर्क इन प्रोग्रेस है मेरा 1 करोड़ का बिकॉज ऑल दीज 3 मशीन्स इफ यू सी आई हैव कैपिटलाइज्ड बिफोर 31st of March. इसलिए ये मेरा मशीनरी में चला गया है. ये जो मशीन है आई हैव कैपिटलाइज्ड ऑन 31st May 18. सो एज ऑन 31st March 18 मेरा 1 करोड़ प्लस AS16 का जो बोरोइंग कॉस्ट है नेट ऑफ माय इनकम दैट आई हैव कैपिटलाइज्ड ओवर ईयर. एंड बाकी सब आई हैव टेकन एंड 2 crores इज माय लोन. जनरल बोरोइंग और स्पेसिफिक बोरोइंग का लोन है और बाकी सब आर माय अज्यूम नंबर्स. सो नाउ फॉर माय क्वालिफाइंग एसेट इफ आई सी दैट मेरा 17-18 फाइनेंशियल ईयर में क्या हो रहा है. ओपनिंग में मेरा बीटा नहीं है, एडिशंस है और ड्यूरिंग द ईयर ही कैपिटलाइज हो रहा है क्योंकि अप्रैल 17 में मैंने परचेज किया और मार्च 18 में मैंने ये कैपिटलाइज कर दिया है. चार्ली मेरा ओपनिंग में है 30 lakhs बिकॉज आई परचेज फेब 17. यहाँ पे 30 lakhs है ओपनिंग. मैंने ड्यूरिंग द ईयर कोई एडिशन नहीं किया और मैंने कैपिटलाइज कर दिया. क्लोजिंग कुछ नहीं है. और डेल्टा जो है दैट इज नॉट अ क्वालिफाइंग एसेट तो ये टेबल में वो नहीं आ रहा है. सो नाउ इफ आई लुक एट इट दैट एवरेज ऑफ कॉस्ट जो मेरा बी में 1, 2, 3 था उसका मेरे को जो लेना है एवरेज ऑफ कॉस्ट ऑफ क्वालिफाइंग एसेट एज अपीयरिंग इन द फर्स्ट डे एंड लास्ट डे कुछ नहीं था मेरा. देयर इज नो एसेट विच इज फर्स्ट एंड लास्ट डे दोनों में है, ऐसा कोई भी नहीं है तो ये 0 आया मेरा. डज नॉट अपीयर ऑन द फर्स्ट डे हाफ ऑफ द क्वालिफाइंग एसेट. तो ये जो मेरा है एडिशंस फर्स्ट डे पे नहीं है. एडिशंस जो है उसका 50% आई विल टेक हाफ ऑफ दैट. And in case the qualifying asset does not appear on the last day, then I will take average as appearing on the first day and on the date put to use. तो इसका मेरे को एवरेज लेना है. तो ओपनिंग और कैपिटलाइजेशन का जो है वो एवरेज मैंने लिया 30 lakhs. तो ये मेरा टोटल आया 42,50,000. इसका जो बी है हमारा A इंटू बी बाई सी में ये बी आया अभी. सो नाउ मेरा जो गोइंग बैक टू द फॉर्मूला what is A? A is the total borrowing cost 10,41,000 over year जो मेरा ये वाला था जनरल बोरोइंग का. B जो है मैंने वर्कआउट किया ये 42,50,000 इसके हिसाब से आया. एंड नाउ व्हाट इज C? C I said मेरा अदर देन क्वालिफाइंग एसेट जो टोटल एसेट है ओपनिंग बैलेंस शीट में आई हैव कैप्चर्ड फ्रॉम ईयर माय ओपनिंग बैलेंस शीट. ये जो है टोटल एसेट जो है मेरा 31,75,000 because this 30 lakh is not a qualifying asset और ये मेरा क्लोजिंग का है उसका एवरेज मेरा C आया. So again over here CWIP I have not taken friends. Why? Because it is out of specific borrowing. तो ये अपने को याद रखना है. तो ये 62,26,000 मेरा A ये C आया. Now what is the borrowing cost? A into B by C. This is the amount under ICDS 9 which is to be capitalized. So ये जो लास्ट पॉइंट था इफ यू रिमेंबर 6 के आफ्टर डिटरमाइनिंग दैट अमाउंट आई विल एलोकेट दैट. तो यहाँ पे नाउ मेरा आया कि भाई मेरे को 7,10,000 मेरे को करना है एलोकेट. तो सिर्फ बी पे होगा एलोकेशन बिकॉज सी पे होगा सिर्फ because even only borrowing cost qualifying asset and to be capital because here in this case only I have paid before I am supposed to I have capitalized put to use. तो यहाँ पे मेरा ये पूरा ये asset में जाएगा. Now what is the impact if we see under AS16 and ICDS 9? मेरा मशीनरी वाइज AS16 में मैं इतना कैपिटलाइज कर रहा हूँ, चार्ली में मैं इतना कैपिटलाइज कर रहा हूँ और P&L में ये मेरा इतना चार्ज ऑफ हो रहा है. तो ये मेरा अंडर AS16 है. Whereas ICDS 9 if I see अल्फा में मेरा कैपिटलाइजेशन जो है 961 हो रहा है. See, please understand friends that once you capitalize more, your profit for the year reduces. Though this capitalization, you will be able to take a benefit over a period of time by way of depreciation, but that would be over a period of time. Whereas under AS16, we charge it off and we immediately show that as a business expense. So that is where this higher capitalization leads to reduced, or I would say higher capitalization would lead to reduced expenses and higher profit for tax. चार्ली में भी मेरा कैपिटलाइजेशन बढ़ रहा है, ये मेरा P&L का चार्ज कम हो गया from 853 to 330. This is what is my business expense that would be allowable other than depreciation, and ये मेरा income जो है वो separately I am showing in my P&L. So this is how the whole amount gets balanced off or matches with the AS16 and ICDS 9. So friends, borrowing cost, like I said, is a very complicated, and you would now realize that in the majority of the cases this would get applicable. Friends, this is just a sheet on what kind of disclosures that would be required under ICDS. Like I said, para 13F of tax audit report, we must report the disclosure. Since this file I'll be sharing with you, you can just go through it, and in case there are any queries, I would always be available. Friends, I'll just again back to my presentation. I'll just see if there is anything important that I need to check out on this. Inventories I have considered, construction contracts. Friends, revenue and construction contracts, one thing that we need to understand is that ICDS mandates percentage of completion method, except in one case where rather I would say two cases. One is where the contract period duration is less than 90 days. So I'll tell you, in the earlier version of ICDS, where I had given in my introduction, in the earlier version, what was there was that everything was under POCM, then there were a lot of representations. Now I'll give a simple example of a courier service. Let us say I have sent given a courier for delivery to the United States of America, where they say it would take a 1 month time. I have given on 15th of March. It would reach on 15th of April. Going by ICDS from 15th March to 15th April, whatever is there is required to be shown under a percentage of completion method, and therefore in such cases it is impossible, and therefore in the next version of ICDS, which is applicable as of today, they have excluded such contracts where the duration is not more than 90 days, or we can say is less than 90 days. So that is another thing. Tangible, there is no ICDS on intangible, there is only on tangible. Forex, we have discussed. Government grants, you can go through these slides. Securities, I have taken the example. Borrowing cost, we have discussed. Provisions also, there are no major such impacting, I would say impacting or reporting discrepancies, but you can definitely run through it. This is just to bring out some smiles on our face after going through such a complicated session, where the tax department says that, it's a very simple thing, where the tax department says that we only want what is ours plus 30% of what is yours. And that is what they say. Friends, one more thing I would suggest, don't forget deferred tax, because if you remember, we have discussed that all these impacts would have our timing difference. MTM, securities, construction contract, borrowing cost, because borrowing cost also under ICDS, under income tax over a period of time by way of depreciation आपको मिलेगा. So ये सब में, these are all timing differences which would result in a deferred tax, and therefore please ensure that you present the financial statements in a correct way, showing the right provision for tax and the correct deferred tax. Thank you, friends. I hope I have been able to do justice to the topic that had been given to me. There are a few questions which I will look at, and then we can maybe open it up for more questions as the branch deems fit. Please share. What if the quantitative stock details is not maintained, then how to give effect to ICDS 2 and 145A? Friends, if quantitative stock details is not maintained, then I would first ask as an auditor, then how you are certifying the closing stock. I would like that also to be seen, because I believe that this is very, very important, that quantitative details needs to be, otherwise how do you come to your consumption, how do you come to your closing stock? And therefore I believe quantitative information, even in tax audit, we need to show, see, there one thing is that you have a number of items, like in case of a retailer, right? But see, even now under GST and everything, you need to maintain a invoice to invoice details, and more or less the tax rate, you can presume that that is same, and you can try to work out on this. I would not take time of everybody whosoever has raised a question. I have shared my mobile number and email ID. Please feel free to connect to me, and we'll find a solution to it. But I would again insist that we need to go on a correct reporting. It might be painful in the initial year, friends, to get all these adjustments done, but we have to do it. Is there a deviation from fundamental accounting assumptions? Is it required to report where it should be reported? Fundamental accounting assumptions as per accounting standards and ICDS remains same, except for prudence. And in case there is a deviation, then only you need to report. Otherwise, you don't need to report. Is proportionate completion method the only method for contract revenue computation? Under AS, you have both the percentage completion and completed contract, but like I said, under ICDS for 90 days and more, what you have is just the percentage completion method, and therefore these adjustments would be required. Whether premium paid on forward contracts is allowed as deduction under Forex ICDS. Friends, premium paid, yes, like I said, see, you have to first find out that the category of transaction. If it is a allowable transaction, where I said that it is not speculative, it is not a forecast or a highly probable transaction, then the premium is definitely allowed, because the premium accounting would also be different, and there would not be any mark to market. But when you do a premium accounting on a hedge, you do it or spread it over a period of time. That is what AS 11 wants us to do. And therefore, in such case, there is no gap between the ICDS and the AS, and therefore that would be allowed. Section 43A and ICDS 6 relation. Again, 43A, friends, the Act would prevail over the ICDS, if you remember, and therefore 43A, wherever you have not made payment for the foreign currency transaction, then in that cases, the gains or loss, it would not be allowed until the final payment is made. That is what I understand is 43A, and that would prevail over ICDS 6. ICDS relating to securities are applicable to securities held as stock in trade and not held as investment. Yes, it is applicable to securities held as stock in trade, because in case it is held as investment, friends, under accounting standards, we don't do a mark to market, right? It is only where you hold it as a short-term investment that a mark to market, or I would say cost or NRV, whichever is lower, is done in case it is a short-term or as investment held as stock in trade, and only in such case the ICDS would come into play. Whether unrealized forex loss on capital creditors, unrealized forex loss will be allowed as a deduction under ICDS 6 as forex loss on monetary items is allowed. Yes, that would be allowed as a deduction, because there is no gap difference in that. Can SSC claim depreciation on interest capitalized as borrowing cost? Yes, I think so. That is allowed. Can we expect ICDS on lease in future? Maybe, friends. Even there was a even in real estate transactions, friends. Let me be honest, that there was this draft ICDS that had been floated. After this 10, it got settled down. Then I think so a year after that, ICDS on real estate was floated, but it has not yet been notified. So we expect that more and more such things, especially if you see that the accounting under lease has now changed. In AS 116 has come into play with effect from financial year 1920, and therefore we should expect the ICDS also changing in those lines in due course. Is ICDS of construction contracts applicable to promoter builder? Okay, I just answered that. Present, if you look at the FAQs also on ICDS, I think they say that it is not applicable. They are in the process of notifying ICDS under, but that is in case of the builder, but not for a contractor. So you have to examine the contract in detail with respect to revenue recognition perspective, and you have to see whether it is a construction contract, a revenue recognition, or it is outside the purview. It is a mix of both and a pure real estate contract, and therefore what is applicable is what we see in such case. Thank you, friends. In case there are any questions, I think I have, yes, 11:18. So Kashi, over to you. Thanks, friends, for a very patient hearing. Thank you, Chitle sir, for that initial, I would say, very motivating introduction. And I would also not forget to thank my regional council friends, यशवंत भाई, who I would say called me and told me कि विशाल भाई आपने लास्ट ईयर भी दिया है, फिर भी इस साल आपको देना है. सो आई आस्क्ड हिम, भाई ऐसा है क्या लास्ट ईयर किसी को समझ में नहीं आया इसलिए वापस बुला रहे हैं. But so Yashwant bhai, Anand bhai, and definitely my good friend Arun Giri for giving me this opportunity. I would have loved to be in person with all of you, but as we all know, but something is better than nothing. And let's be very positive on this end, not positive on the other, but on this. Thanks, Kashi. Back to you. Over to you.
Thanks, sir. Anyone have any questions? I think all questions are answered. Sir, one, two question missing. Whether realized M2M loss allowed under deduction under ICDS? Hello?
Yeah, Kashi. The first two that I answered when I took that, but I'll just repeat. MTM loss is allowed as a deduction. Like I said, that there are categories of transaction which are permitted and those which are not permitted under ICDS 6. That would be the MTM loss would get disallowed under ICDS 1. And on the alternate minimum tax and MAT also, I mentioned that your books of account would not get impacted. These are just adjustment only to the computation of total income. And therefore, there would not be any adjustment or any impact of the ICDS as far as the MAT or AFT is concerned.
Okay. I sincerely thank sir for giving wonderful insights in ICDS. Thank you, sir.
Kashi, just one thing, because there are a lot of messages on the chat I can see about how to get. I will mail across to the branch my Excel file as well as the presentation, and Kashi, you can take it forward from there.
Okay, sir. We will upload in on the website, Pune ICI website. One more suggestion received from member. Seminar or ICDS seminar application in the industry. We will definitely. Thank you, sir, for giving time, wonderful time. Thanks all participants for patient hearing. Now we take short tea break. Then the next session starts. We will start. Thank you, sir.
Thank you. Bye bye. Thank you.
Welcome, sir.
का लवकर चहा पिऊन आलेलं दिसतं. घिया सर पण आलेत.
स्टार्ट करू सर.
हम्म?
स्टार्ट करू आता.
हो 11:30 ला करा सर. 29 झाले ना.
हा.
झाले 30. Yes.
I am not in a hurry, Chitlaji.
नहीं sir, we are in hurry to listen you.
No.
So that
If
most
you-
time is more time is given to you.
Don't worry, let him complete. I'll extend the session if you want. Don't worry.
Yes, of course.
Thank you, sir. Thank you.
सर करायचं स्टार्ट.
Yes, sir. Participants are already there.
Good morning, all of you. I welcome all of you for today's second session. Overview of appellate proceeding. Today we have our Central Council member Tarun Ghia ji and our own Central Council member Shekhar Chitle sir. I request Chitle sir to give his remark.
Good morning, friends, and welcome once again. It's indeed a pleasure to have very learned council brother in this particular session. Ghia. As far as income tax is concerned, definitely he is an expert into it, but his expertise is not confined to income tax. If you talk of any law and interpretation, I am sure that Tarun Ghia is having all those skill sets really to make us understand what the particular thing means and what it does not mean and what are its merits and what are its limitations. In fact, in council meetings also I have witnessed that whenever he is speaking, every council member pays rapt attention for a simple reason that his elucidation of a particular topic and his propositions are so worthwhile that if you miss something out of it, I think you miss the topic. As far as Mr. Tarun Ghia is concerned, immovable property is at the back of his teeth. Like if you ask anything on immovable property, even if he has gone asleep, he will just wake up and will inform you all the answers relating to immovable property taxation along with sections, and that will not be confined to immovable property income tax, but what RERA views it, what are the other property laws, what is the stamp duty angle, all those will come to the fore. He has experience of more than 3 decades in appearing before the Appeallate Authority, maybe the first Appeallate Authority and the Income Tax Appellate Tribunal. Besides Income Tax Appellate Authority, there are other appellate authorities as well, like under RERA and other laws. So there also he has played a great role. And it is indeed our pleasure to know the nuances of this particular appellate proceedings from my very good friend Tarun Ghia. So with this opening remark, I have pleasure in welcoming you, Tarunji. And really, we will be very happy to have a presentation on the topic from you. And year after year, I think Tarun Bhai gives very limited talks, and Pune branch is one of his favorite branches. So whenever we invite Tarunji, he readily accepts our invitation and agrees to guide members from Pune. So thank you, and over to you, Kashinath.
Thank you, Chitle sir. Uh, Today we have C.A. Tarun Chamandas Ghia. He is a practicing chartered accountant since 1984. His core area of practice include consultancy and appellate representation in income tax matter consultancy. He has also representation in RERA, economic and commercial law, and other real estate law, Hindu laws in litigation and appellate practice, in drafting of documents, arbitrations, project management consultancy in redevelopment and self-redevelopment, consultant to builders, developers, and in real estate transaction. He pleaded in a person writ petition at Bombay High Court. He is a speaker at address more than 2,000 meetings, including India and abroad, of CAS, commissioners of income tax, C&AG officers, CPA officers, ROC officers, public meeting on taxation law, on real estate law, drafting document, economic issue to builders, architects, engineer, and their association, including BAI, CREDI, PATA. He is also elected Central Council member of the ICI. He is a presently chairman of Direct Tax Committee, also chairman in Economic Commercial Law and Economic Advisory Committee to deal with FEMA, RERA, IPR laws, construction laws, stamp duty and registration laws, anti-money laundering laws, arbitration law, business support services, startups, all commercial and economic laws and economic field. He recent past from time to time, chairman of Expert Advisory Committee, Direct Tax Committee, Economic Commercial Law Committee, India's Implementation Committee, Public Finance and Government Accounting Committee, Cooperative and NPO Law Committee. He is a director of Account Research Foundation. He is ICI representative on Central CBDT for MAT and AS and income ICDS issues. ICI representative on CSR and Ministry of Company Affairs. He author and co-author various publication on RERA, Section 150 JC of ITI Act at ICI, from guidance note for real estate developers and India's compliant. Technical guide and guidance note of ICDS under Income Tax Act. Group head on Indian Economic Group of CEL, Independence of Auditors, definition of accountant and other services or CA can render, integrated reporting, Indian accounting services, Indian auditing services on the line of Indian civil services to amend the provision of the CA Act and regulation. Born and brought up Saurashtra, become from Mumbai. His contribution on real estate sector. He has contributed largely on legal issues and real estate transaction as well as our new law on RERA. On RERA, he is addressed Builder Association of India, CREDI, and the occasion of RERA authorities. He is a writer of popular column on properties law and tax on newspaper like Times of India, DNA, Vapar, professional magazines. He succeeded and representation at ITTR landmark judgment deciding zero taxation on society redevelopment, and addressed several times of gathering including Commissioner of Income Tax Builders and on various forums. He is advisor to Builder Association of India on direct tax matter for their revenue representation to the government and other concerned authority. He is a writer, speaker, and practitioner on RTI law, engaged as an arbitrator and played on at arbitration proceedings. He is a member of Indian Forensic Research Foundation. He is well read on income tax law, construction law, property law, PMC law, rent control law, cooperative law, stamp duty and registration law, RTA law, Hindu law, and is conduct reading of building plan related approval and their respective relevance on and significance under general law and areas under the direct and indirect tax law. We are honored, sir. Honored, sir. I request, sir, to start the session without taking time. Sir,
You are
please
on mute.
unmute.
Thank you very much. At the outset, let me express my thanks to the chairman of the very active Pune branch, Sri Abhishek Damneji, as also the secretary cum treasurer, Sri Kashinath Pathareji, and most importantly, my very learned and esteemed colleague in the council, whose contribution is quite not only balanced, but also right-minded in the council in this very first year of his councilship, CA, CCM, CV Chitleji. My wishes of Independence Day to all the present, and expressing my view that one should really think of the freedom of speech and independence on this day in a manner that one is not suppressing too much his own self, firstly, so much going against his own conscience and creating dilemmas within himself only. Because this is what is making the society very unhealthy and every institution of the society very unhealthy, when people who are able to understand, able to express, do not express themselves for various practical reasons. And at the same time, always appreciating that like I am having the freedom of speech, independence of speech, I should be able to appreciate the same in respect of others. I'm sorry, I think my house, just give me 1 second, please. Because we had a small informal meeting and I came just from there. I'm sorry. What I was trying to say, appreciating the freedom of speech to the others also is equally important. For the reason that I believe that the difference between the developing country and the advanced country is one of these and very significant difference. There the people are expressing themselves without so much of dilemma, because others are able to appreciate also. Coming to the topic proper, my very learned colleague has praised me overwhelmingly. So first of all, I am thankful to him. But if I take it seriously, then if I have some credentials in the context of analysis and interpretation of laws, I believe every chartered accountant has the same credential. Because I have, to whatever extent I can reach, I have reached to that level from very grassroots level. Why I'm saying so? Because I genuinely treat and consider CA as a very, very learned professional. At the same time, these aspects, analysis, interpretation, drafting abilities are not really taken to the right potential by most of us. And that is where the issues are arising. For the reason that more of us are under the pressure of information flow. There my considered view is, let the information flow continue. We are in the world of fast changes, every momentary changes and in so much quantum. But we should have some clarity about the subject. If one has the clarity, one can easily grasp the changes very fast. I am audible, no?
Yes, you
Hello?
are audible.
Okay, because I suddenly I saw the screen becoming blank. I'm understanding. Another aspect which I believe is that the Prime Minister's recent speech, as a direct taxes committee, we have taken in two manners without going into the merits and the criticism or critical aspects of the speech. As a professional, I would believe that the relationship of direct taxes and all revenue laws are between the government and the stakeholders. Professionals are not the stakeholders. Professionals have to express their views on the policy matters as citizens and on behalf of the taxpayers, but not on their own behalf. And ultimately, professional has to settle with whatever budget is given and whatever policy has been given. So the policy I am understanding and subject to consideration by Chitleji also, it has twofold. One is that certainly he has strengthened the charter applicable to the tax officers. But before that, he has emphasized that the taxpayers are not really so much honest because the assumption he wants now to be coupled with more and more disclosure. And I am not going to the merits or demerits, but there are realities also. As a professional, what I understand is that those who are in the implementation practice, in the compliance practice, their roles have tremendously increased. And there my suggestion as a chairman of the Direct Taxes Committee is that take your role very seriously. As a professional, your attempt should not be how not to disclose what requires to be disclosed. That is the thing which harms the profession very hugely. Your approach should be to guide the client that these are the things to be disclosed. So give me on either email or on piece of paper. Even if many a times you have done the exercise on behalf of the client, but your communication should bring out very clearly that those details which you have extracted, you have done so on behalf of the client. Because what I am finding is huge lack of professionalism, and I mean it, in the chartered accountants. That all other professionals are very clear in obtaining the signatures, in putting the communication so brilliantly. But our professional, our chartered accountant, who is so well versed, is failing and is considering relationship with the client as that of family member, which is completely wrong, and one will have to go thoroughly professional in whatever one does. Coming to the topic proper, my presentation will be extempore because I have not unfortunately brought anything from the office, but I am confident to present, and my very learned colleague is also there to support me. What is my consideration in giving this presentation? When Abhishek he insisted and virtually persisted that I should speak, and as Chitleji rightly said, I am not so eager to speak nowadays at the public forums, for the reason that I am trying to confine my time to the practice and other social fields. That what is my consideration in the presentation is that chartered accountants are learned or capable of being learned of the provisions of the law. Second is more important, that they are capable. Then chartered accountants are always far more well-versed with the facts of the case than any other professional can be. But what is lacking sometimes in us is clarity of the law. That do I see the income tax law as a whole? Am I able to envisage when something happens, what are the options available to me? When something happens, what are the limitations applicable to me? Unless I know the subject, I think I cannot call myself expert. Chitleji told me, presented me as an expert. I will only say expertise is time relevant, and nobody is expert in this world. It is, only the student who can really become the best of the expert for the time being and for the subject relevant only. So coming to the topic in that context, my first point of consideration would be that what are the options, what are the remedies available to an aggrieved SSC when he is aggrieved of some particular order or ruling. or many a times non-ruling by the authorities, which is nowadays becoming more important. And alternatively, what are the options similarly available to the department also, for the reason that an income tax officer, or rather an assessing officer, is a quasi-judicial officer. One should know that, legally speaking, practically we know how what is happening, but legally speaking, neither the Commissioner Administration, nor the Commissioner Appeals, nor anybody else can direct him to draft a particular order in a in the exact manner in which he wants. Some general directions can be given, but with reference to a particular case, he is the boss while writing his order. And therefore, it is possible that after the order is passed, even the department also can be aggrieved of the very same order. So the remedies available to the SSC can be enlisted briefly like this: that the first and the easiest remedy, and therefore with so many limitations, is as contained in section 154. Section 154, the keywords are mistake apparent from records. So you will appreciate every word as the specific interpretation, that it should be confined to mistake only. Mistake and error stand on a very limited footing, that it should not lead to any kind of debate. And secondly, it should be very, very conspicuous from perusal of the records. So in general, if you talk of an assessment order, what is the record? Record is what you have submitted either in the written or during the course of assessment proceedings. And that is, and what the assessing officer has drafted. So this much is the thing. You cannot add anything to say that there is a mistake. You cannot go into long interpretation to say that there is a mistake. I think this much is sufficient. And more important is to also mention that 154 is applicable to income tax authority. So it also deals with, it not only deals with the order passed by the assessing authority, but it also deals with the order passed by the CIT appeals. So it would mean that order passed by the assessing officer can be rectified by himself only, and the order passed by CIT appeals can be rectified by himself only. I think for the time being, this much is sufficient because the subject is vast. Secondly, the second remedy to the SSE, which I think is far more ignored because of ignorance of law, and is sometimes very, very helpful in peculiar case of the facts of the case, and which is under section 264, which deals with remedy, which deals with revision. Now, revision as a remedy has very, very brilliant aspects. First of all, the powers of the Commissioner Administration are very, very wide in the context of revision. So it does not have limitations like whether you produce this thing before the assessing officer or not, and the things like that. The Commissioner Administration can consider any material which has been produced before at the assessment level, as well as he can consider any other material which may be produced or which we may demand before this which could not be produced before the subordinate authority. So the powers are very wide. Then there is a time limitation which is very limited. I am not going into the statistics because I do not have the habit of remembering number of years and all these things that can be acquired at the particular moment of arguing the matter. The cardinal aspect of 264 is that it is an alternative to the appeal remedy. So meaning that you should not have filed the appeal. You should not have filed the appeal. And if you file the appeal, then you should withdraw the appeal. Secondly, the subject matter of the order can be non-appealable also. So this we'll learn little later when we deal with the appellate proceedings. So this is the fundamental. And then there are time limitations, as I said. And most important aspect of 264 is that under 264, the SSC cannot be placed in a prejudicial, the order cannot be prejudicial to the interest of the SSC. What does it mean? That either it can be zero order, passing the order against the, telling the SSC that no revision is possible in this case. Or it can be reduction in the income or increase in the loss or reduction in the tax or increase in the refund. So the SSC cannot be placed in a position worse than what he was before he approached the CIT administration. This is very, very important and will become more clear when we deal with the appellate proceedings where powers of enhancement are there with the Commissioner Appeals and not with the tribunal. Now that is second remedy I talked about. The 264 case can be, for example, you did not produce the TDS certificate. Some I understand, because I am not in grassroots level practice, that income returned or not returned, TDS certificate submitted or not submitted, and some of the orders which are strictly not appealable cases. Then what are the remedies available to the department, which I'll mention briefly. That the first and foremost remedy to the assessing officer is under the powers given under section 147 and 148. 147 is the reassessment and 148 is the notice for reassessment. Now, as the law has been drafted, I believe that that the reassessment will have to be segregated into two parts. This is very important because first part is far more important and it cannot be termed at all as reassessment. The first part is strictly reopenment. So what does it mean? That the reopenment would mean that the assessing officer, when he forms an opinion that income chargeable to tax has escaped the taxation, then he will issue a notice within the prescribed time limits under 148. After he issues the notice, and then he has to also, either in the notice or otherwise, he has to also disclose complete reasons for reopening for his intention to reopen the assessment, not reopening, for his intention to reopen the assessment, strictly speaking. Why so? Because thereafter, it is an established position of law that the SSC has entitlement to object to the reopenment. He can challenge the grounds of reopenment. He can challenge the reasons of reopenment, and the law is very, very litigative. Law has many, many limbs, and all the limbs are not only litigative, but many of the limbs are settled also by Supreme Court itself. That not being the prime of the subject, but suffice to add there that it is the duty of the assessing officer to deal with the objections of the assessing. And only thereafter he can proceed for the reassessment. Now, at least I have not seen an order where the assessing officer has said that, okay, the reopening notice I have given, the reasons are not sufficient, your objections are very valid, and therefore I am dropping this reopenment proceedings. If you come across, please send it to me, to Chitleji, and or to me, because that will be a good case of example for the entire department, and as a direct tax committee chairman, I am interested in such an example. But what is the problem? Limitation over there for the SSC is that even his objections have been denied, have been set aside many a times in a very, cursory manner. But there is no appeal provided in the law to the reopenment itself. In some cases, the SSCs, for valid reasons, have approached the High Court. You will appreciate that the High Courts, under Article 226 of the Constitution, and Supreme Court in appropriate case under Article 32 of the Constitution, have very, very wide powers. And therefore, for valid reasons, the SSC may approach the High Court with an contention that the reopenment is a very, very invalid case. In this case, has no legs to stand, and it will lead to unreasonable unreasonable and avoidable sufferings to the SSC. But High Court is going to, because I stand to my words that unfortunately judiciary is not behaving in the manner it should behave. If you do something wrong, you will be punished. But I am sorry to say that the judges doing so many wrongs are not really taken to the task in the manner they should be taken to the task. Subject to that, in the countries like developing countries, we are made to suffer and we have to accept the state of affairs. And accepting that, what happens is that High Court generally tells that you have got alternative remedies, no? So first you exhaust and then you come to the High Court. This is the general answer of the High Court. In appropriate case, the High Court also has handled the cases of reopenment and has put the stay on the reopenment itself. That can be a good relief to the SSC, because otherwise what will happen? That despite the objections being not handled by the assessing officer, the SSC will have to cooperate fully. Maybe, under protest. Your protest is implied only when you write the objections. No need to separately mention, as some believe. So, although you are cooperating in the reassessment process will proceed as if you had not objected to it. And then it will go to its full, strength. And the assessing officer will pass the order. Thereafter, in the CIT appeal, you may present your first ground as the learned assessing officer has erred in facts and circumstances and on law in reopening the assessment. So, this is 147, 148 in short. Then the second remedy to the department is in the form of section 263. 263 is a revision by the same Commissioner of Administration which you had visited in the context of 264. But the powers under 264 are confined to the interest of the SSC, whereas the powers under 263 are confined only to the interest of the revenue. Because two limbs in 263 are very, very clear, that the order of the subordinate authority should be erroneous. It should be erroneous, and that has many, many limbs of interpretation, which is not again the prime of the subject here. The order has to be erroneous, and some courts have taken a view that inadequate inquiry also is erroneous. This is one of the latest developments. And secondly, is that the order is prejudicial to the interest of the revenue. So revenue should have suffered in terms of revenue by this order. And the two limbs are cumulative. So only when these two limbs are satisfied, then Commissioner Administration can write a notice, or show cause notice kind of notice to the SSC. And once again, the SSC will file its submissions that why revision should not happen. But again, the fate is as it was in the case of reopenment also. I have not seen an order where the revision has been initiated, but has been closed also by the Commissioner Administration. But I should rectify myself that I have not seen. I have seen very rare cases that here the Commissioner is certainly considerate on the reasons, on the explanations you give that the case is not fit for revision. Otherwise, revision will proceed. But here, the law has clearly provided that the very revision is also challengeable, and you can file an appeal against the very revision at the ICDS also. So this is the third remedy I mentioned. As I said, my approach will be to grant clarity to the subject, and of course the clarity to the extent I know. It will be limited to the extent I know, and I'll try to express the same clarity to you. The another aspect which also comes up from consultants many a times is that there are cases where you believe it is a case of mistake prima facie on record. So you file the rectification application, which either the AO is sitting over the order or your application, or the rectification application may be under consideration. But rectification application and appeal can be parallel also. So whatever you submitted in the rectification application, you can also submit in the appeal also. And when your rectification is decided to the extent positively in your favor, then to that extent the appeal grounds can be amended also. There are provisions for amendment of grounds also in the CIT appeal. So this was the background. And the last remedy, which is the subject matter of today, is the appellate proceedings under the income tax law. So the appellate proceedings per se would mean the appeal at CIT appeal, then the appeal at ITAT, Income Tax Appellate Tribunal, then the appeal at High Court, and then the special leave petition, followed by appeal at the Supreme Court. These are the appellate levels. So, filing the appeal before CIT appeals is since some years have been fully made on electronic basis. People have expressed some limitations in something like number of words, etc. I do not go into these details because my office handles, but I am sure that those limitations are only of misconception. There are no limitations, and ultimately the appellant has been given complete avenue also, and entitlement always was there to represent his side in as many words as he wants to present. There are forms like form number 35 is there for filing the appeal before CITA. Now, as you heard, Prime Minister, and it was already there in the budget propositions also. And as a Direct Taxes Committee chairman, I can tell you that I was first of all lucky that in 2015 I was given this committee. In 2007 I was given this committee, and now also I have been given this very important committee. We have, Direct Taxes Committee, Corporate Affairs, Accounting Standard, Auditing Standards, which are far more relevant to the chartered accountants. So I have been very forthcoming, and I have been very vocal, and I am pursuing the department in all these years to make the assessment fully disconnected, not even the last phase of assessment by physical hearing, because if one hearing or one chance of meeting is given, then everything earlier fails only, because just 2 minutes are sufficient to convey my message to the assessing officer, and assessing officer's message to me, and ultimately to the client. And I have never blamed chartered accountants who have engaged themselves in the liaisoning. My only concern is that the chartered accountants who are engaged in the liaisoning are too much submissive. You take the example, and I do not mind in naming the other professionals, because we have to borrow the right qualities. You take the examples of advocates. Some of them are also in liaisoning. But in this context, and I am telling you, I rate CS as very, very highly placed in terms of knowledge, analysis, and law itself as compared to advocates. But here I find that advocates are very, very, tight. That much tightness may not be good also in representing their side. What some of our members are doing, they become too much submissive. No, even though you are doing liaisoning, because liaisoning is not your problem, it is the problem of the nation, it is the problem of the system, and it is the problem created by the expectations of the authorities, and it is the problem created by the peace-loving stakeholders. So you are only an instrumental. You cannot change yourself. Your conscience may tell you, and therefore you should not enter into. But if your conscience is practical, then you are in the liaisoning. But at that time also, you should be able to fully strengthen your case with knowledge. A knowledge-based liaisoning is far more helpful to you also, to your dignity also, and to the interest of the clients also. But I am not on that subject for the time being. What I am trying to say is that when you are representing before the authorities, you should be fully aware of your rights and obligations. So coming to the CIT appeals, there are time limitations, there are prescribed forms, and then there are preconditions also. These preconditions are very important. Why? Because it is a legal position that filing an appeal before the appellate forums I should not say appellate authorities because ITAT is not an authority, High Court is not an authority. Appellate forums is a statutory right. It is not an inherent right, as it has been said. So it is not that every order of which an SSC, a taxpayer may be aggrieved, is appealable. It is a statutory right, so it can be prescribed, it can be limited, and it can come with preconditions. And for that matter, the list of appealable orders is given in a very comprehensive manner under section 246 capital K. And one has to refer that list. The question arises that if the order of which I am aggrieved, and there are many orders, for example, grassroots level CS far more know the orders under 197, the orders under 222, etc. So some of them are examples I am telling. So if your order is not falling in the 246 capital A, then what are the remedies? Then I would conceive, to the knowledge which I am having, that first of all, if you refer to 46A, within brackets I am forgetting 246A1, I think small a is also there, but you may just see the one. And in the initial one or two paragraph, the words somewhat are contained are like this. First of all, the paragraph is joined with the conjunction of or. So you will appreciate that when some two or more sentences are with the conjunction of or, then you are given the relief in this case to select either of the sentences. So the conjunction being or, you have been also told in that very paragraph that if the SSC is aggrieved of the tax determination, if the SSC is aggrieved of the income determination, if SSC is aggrieved of the refund or loss, things like that. So even if your order does not fall into the subsequent list, these words are very sufficient to tell that look, I may not fall into the succeeding list, but I am aggrieved of the income which has been assessed, of the status in which I have been assessed, of the loss in income includes loss of the tax or refund which I am assessed. So that first paragraph gives much scope in filing the appeal to say that I am aggrieved because of this very vastly drafted wordings. But it is possible that your case does not fall into these vastly drafted wordings also. Then the questions would arise what to do. In my understanding, if none of the remedies are able, then ultimately the order which is not appealable, and if the order is pertaining to a central law, then one can file the writ petition against that particular law, particular order. So this is my brief understanding of the 246A, which is based on the fine print that appeal is a statutory right and not an inherent right. Then the procedure, as I said, is EE procedure now, and one will have to file the form and related attachments. Now the related attachments are the form itself contains two important segments, and that is statement of facts and grounds of appeal. But I am sorry, before I come to the statement of facts and grounds of appeal, I must mention that in the income tax proceedings and in most of the revenue proceedings in other laws also, there is no stage like admission stage. Like in civil matters, if you file a petition, there is something like admission. Here there is no admission. But admission becomes important here in some cases. For example, you file the appeal with delay. Then you will have to file the application for condonation of delay. That application will be first considered, and unless your delay is condoned by written order, appeal proceedings cannot commence. And therefore, there may be some cases same way in the tribunal also, that if your appeal is delayed. And as far as delay is concerned, in fact, there are many judgments. Then the law, I think, be settled by the Supreme Court here now is that first of all, delay is not your entitlement. And therefore, you will have to explain the delay of each and every day. Now, each and every day is one aspect of limitation. And second aspect of all delay is condonation of delay is that by delaying, the appellant really does not benefit. On the contrary, in the manner in which systems have been enacted and they are practically operating are very harmful to SSC who delays. And therefore, the courts have repeatedly said that law on condonation should be liberally interpreted. So combination of both will also tell that delay of each and every day to be explained does not mean that it has to be taken literally. It has to be taken subjectively. So I have always given an example that, for example, if somebody was sick and he was hospitalized, then does not mean that the very moment he is discharged from the hospital, the first thing he has to do is file the appeal. That he was sick, it means that he will get the reasonable extension, reasonable condonation. And he can take his reasonable time also after recovering from the sickness to file the appeal. Now, coming to the appeal, the main segments of filing the appeal are by virtue of the statement of facts and the grounds of appeal. Statement of facts, in fact, must be taken, both these things must be taken very seriously for the reason that what is happening is that at CIT appeal level, many members are practicing. But the knowledge of the law is not so much as required, and they are not really so much prepared to learn that much, to acquire that much knowledge. So what happens that where many a times very clumsily drafted statement of facts and grounds of appeal are read. What is that I am trying to say? Is that let us understand statement of facts, as the nomenclature indicates, is confined to facts only. So you have no scope there to say that the income tax officer, assessing officer has not understood the law, has not understood your facts, and all those qualifying adjective words you can postpone for the time being. That is not the place for, they are not for the place of statement of facts. At the most, to my understanding and what I have been doing is like this, that you can say that the SSC has claimed so and so, has contended so and so, with this much factual support, with this much reasoning, and learned assessing officer disallowed this so without perusing the material on record, and that he has given these reasons or he has not given any reasons. So statement of facts you will have to understand are to be confined, is to be confined only to the facts, whatever happened. And there is no place of, putting value judgments of right or wrong over there. Then comes these grounds of appeal. At the same time, statement of facts can be as much comprehensive as you want. As much comprehensive as you want. As against that, grounds of appeal have to be very precise. They have to be very concise. Sometimes if you find that the particular ground is becoming little long because of the requirement, then you may be advised that to decompose that ground into 2 or 3 pieces, into 2 or 3 grounds. That may be done as may be possible. In many cases, you may have alternate grounds also, because you may contend that something is not taxable only. So your first contention is not taxable. In fact, my profile I will rectify every time I hear this, and then I realize that my profile is to that extent wrongly drafted. It may be wrongly drafted in many other contexts also. I have not applied my mind that I have brought the landmark judgment in the context of society redevelopment. I should have removed the word society, because the principles which I applied in the very first judgment were based on the celebrated Supreme Court judgment in the case of BC Srinivas SFT, that the asset which does not have, which has no cost of acquisition, no and nil are different. That has been made clear by the amendment in 1994 Act. That which has no cost of acquisition cannot result into any capital gains. So it is not applicable only to society, it is applicable to all the redevelopments also, and to many other places also. But that not being the prime of the subject, that sometimes you may have alternative grounds of appeal also. So you may say that the receipt is not taxable at all. And alternatively, you may say that the receipt is taxable as long-term capital gain. And alternatively, you may say the receipt is taxable as short-term capital gain. So you may have alternative grounds of appeal also. And the grounds of appeal have to be precise, but there is no limit on the number of grounds. So you can present as many grounds as required. But as required, many times what happens that the professional in the context of taking no chance, he write down many grounds, and thereafter the CITA or the tribunal may say, please amend your grounds of appeal and then come. This may become very unreasonable situation for the professional, because your grounds have been drafted in an overlapping manner. And in an overlapping manner, so it becomes, a very important issue. And let me tell you, friends, that unfortunately, the judiciary, at least in this country, goes so much on your impression, so much on your face value. And if you make some mistakes, then your overall assessment is done that you don't know this thing and therefore you do not know many things. In fact, the judge has to be very cool and calm and considerate, not to put value judgments on one or two or many aspects also. A person who has done many wrongs can be right on a particular aspect. But unfortunately, this is the state of affairs in which the world is operating. So coming to that, you will have to be very careful, particularly if you are a novice in the practitioner in the appellate proceeding, because your reputation is at stake, and therefore you should not make very silly mistakes. So that is, I think, about grounds of appeal. Also, you should not be argumentative. Your ground of appeal, and as a given example, can be in the facts of the case, in the facts and circumstances of the case, and on law. Learned AO has erred in disallowing so and so expense, in assessing the income offered as long-term capital gains as business income, in assessing the income offered as short-term capital gains as business income, or so and so. Either he has erred like this, or he should have appreciated like this. But strictly speaking, there is no place for writing judgments in the grounds of appeal. In one particular ground, you may write that the learned AO has not really interpreted the verdict of the Supreme Court, which is the evolved law. In appropriate case, you may write one or two judgments, but strictly speaking, the judgments are not to be written in the grounds of appeal. And you should not have put any value judgments whether learned officer has understood the law again or not. For whatever stuff it is which is there, in your mind or your SS's mind, the best place is written submissions. Written submissions can be in thousands of papers, but that depends whether you want thousands of papers or whether you want hundreds of papers or 20 papers, because whether you want your papers to be taken seriously or not. Because you will appreciate that today everybody is operating in the midst of very shortage of time, and the authorities have all the powers, and I am surprised not so much of responsibility also. But now I think with the unveiling of the team assessment, many of the lacuna will be redressed, hopefully. Sorry. So these written submissions can be submitted by you at any time after you file the appeal, at the time of hearing also. And most of the CITAs would generally read your written submissions and will decide the case. And your appearance before the CIT appeal also, in hearing also, should be well prepared. I would distinguish like this because yeah. So wherever necessary, I'll address the issue of CIT and ITAT together. That there is a tendency, and there is a very shallow tendency in the professionals. They telephone also. ये point के ऊपर आपके पास कोई judgment है कि नहीं? First, you should know that you should be fully aware of the facts of the case. It is so much frequent that on most of the issues, the professional presents only judgment, which is completely wrong. You will have to compare the facts of the case with the with the judgment also, with the decision also. You will have to find out the similarities upon which you can depend upon. You will have to find out the distinctions also, which may be of help to you in many cases. And most importantly, as I was trying to tell, there is a tendency to compile only the favorable judgments. Why it is wrong? Because let me tell you, all the CITAs nowadays are all IRS officers. And IRS officers, IAS officers are the bookworms. They are far more well-read. They are far more well-read, although I have got full regards for chartered accountants also, and many IRS take our advices also. But that is on one-to-one cases. In general, the IRS officers are very well learned. And now this information technology age has made it very easy for him to find out all the decisions, all the judgments on the subject at the click of the mouse. So you may go with only favorable judgments, but the CITA will tell you, this is the latest judgment. Even though tribunal, you tell what is your opinion about this, because I am going to consider this. So if you are not prepared, you may be given time by CITA that you file the response to this. But it is better you are prepared. It will save your time also, and it will add to your credibility. When it comes to ITAT, you have no right to say that I have presented this judgment. Learner DR has given this judgment just now only. I am not read on this judgment, and therefore I will require date. I think it will be very, very sorry figure, and I have at least not seen an argument on these lines. In appropriate cases, because now so many ITAT members are new also, and many of them are considered to the new members, that somebody may grant you time. But ultimately, you should be more prepared on the judgments which are adverse to you. Then you should be able to bring out that either the decision judgment has already been considered in the subsequent one, overruled, or after consideration, this is the fine distinction, etc. So as far as appellate proceedings are concerned, I'll put that first of all, one should be very, very well versed about the provisions of the law in correlation with the facts of the case. And secondly, one should always be updated on the development of the law. Always be updated, not necessary that every day you go on reading the judgments also, although that is also very important, but your office should have some system to analyze the judgments and to store the judgments which are relevant to specific clients in their computerized folder only. Now, hearing before the CITA and powers and functions of the CITA are, some of the important aspects are like this. That first of all, a revenue appeal is not withdrawable. Although many appeals are withdrawn and allowed also, but this is the law and therefore may not be allowed. So that is where, I was trying to tell you that sometimes you have to exercise the remedy in 264 also. Your case, when you got the order, you realize that things have gone against you and therefore you are aggrieved. But things could have gone far worse against you. Then you may think twice before filing the appeal. Because if assessing officer has not done this adequate inquiry, if the assessing officer has not looked into many aspects, that does not mean CIT appeal also will not do it. The powers of CIT appeal are coterminous with those of the assessing officer. It means that whatever assessing officer could do, the CIT appeals also can do. So what it could do and did not do the AO, now CIT appeals will do. So you have approached with 3 of the grounds only. and the CIT appeals go into more details, and you realize that you should not have filed the appeal, and you feel like running away from the scene. Now that is not allowed, and 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 many a times we advise the concerned CA that you do one thing: you do not file the appeal if you feel that this is in you know inconvenient details is demanded, and you know the consequences also. Many CIT appeals forget also the matter and sometimes dismiss also the case. But that is your good luck if the CIT appeal does not exercise its powers to the fullest because of its sometimes, many other aspects of practical reasons, including his own labor required, etc. That CIT appeals powers are coterminous with those of the CIT appeals is first factor. Second aspect is that as far as your submissions before the assessing officer are concerned and before the tribunal are concerned also, you cannot submit something which was not submitted at the assessing officer's level. Now this is very, very important because, and legally very important for the reason that appellate proceedings are continuation of the assessment proceedings. What you are saying in the appeal? You are saying that the learned AOS erred in doing this. Now, if you submit some additional material, you are trying to tell the appellate authority that learned AOS erred in doing this because I did not submit particular details. So what you are trying to say, it is his erroneous order or it was your mistake. So per se, you cannot submit any additional evidence, any additional papers or documents. At the same time, to take the justice to the fullest, the CIT appeals have been given wide powers on justice to enable you, to enable him to allow the additional evidences. And these wide powers are in addition to Rule 46A. Rule 46A gives you specific entitlement to the SSC to file the additional evidences, which was not filed at the assessing officer level. So Rule 46 capital A has small a, b, c, d. This a, b, c, d gives you reasons that, for example, the assessing officer did not demand a particular thing, or that you had no sufficient opportunity, or the things like that. The assessment was being done in the tag end of the time limitation, which generally happens, and therefore you could not produce certain documents and papers from bank, third party, etc. And so many such reasons are possible, and which are largely accommodated in that 246A, no, not 240, that 46 capital A, ABCD. And even if you don't fall strictly into ABCD, then the Commissioner of Appeal has been given wide powers to entertain your additional evidences. But whenever you submit such additional evidences, do not take a chance of first submitting and then the CIT appeals coming to know, because even if CIT appeals does not pay attention that you have not submitted to the AO, this filing without his understanding is harmful to more to you than him. The law has been drafted and is operating in such a manner that everything will go against you only. For a reason that you have to submit in duplicate these additional evidences so that CIT appeals will send one copy to the assessing officer for his comments and his views, because earlier he did not have the opportunity of looking into these papers and evidences which you are filing for the first time. And then his report will come. That is called remand report. Until the remand report comes, generally your appeal proceedings are in cold storage. Supposing the CIT appeals does not come to know that these are additional evidences. Supposing he allows your additional evidences without sending it to the AO, then why I say it is more harmful to you? Because then the order is passed. If the order is passed under particular circumstances of cooperation also, now that cooperation is likely to end completely because of the new system, that even though it is a cooperative order, anything, when the matter goes to tribunal, the DR is most likely to say that, look, these particular papers do not find any place in the assessment order. So assessing officer did not have the opportunity. So the tribunal, even though tribunal is considerate to you, will not have much scope but to tell that let these papers go to the AO and your journey will once again get recycled. And therefore, it goes against your interest till the time finality to the appeal comes. SSC will only succeeds under the present system. While you file the additional evidences, you require 46A to be followed. But the law has been enacted in such a manner that CIT appeal can demand any paper document not submitted earlier, and he has no binding rule of 46A. But there also, you should suggest that, sir, I am submitting this, but will it be proper that it goes to the AO also? Because the reasons I have just now told you. That at the higher level, this point is most likely to come up. That the documents and papers which were considered by CIT appeal and particularly favorable or passed in favor of the SSC can be challenged by the DR on the ground that these papers and documents were not presented to the AO for his views and comments. There are cases where you presented so many things and the AO has not brought everything on record. First of all, you improve your system because in law, all duties have been cast upon you far more emphatically because your stakes are involved. They do not go on submitting the papers like on species basis, you know. You submit your submissions always under a covering letter. So in the covering letter, if you have submitted 12 papers, 12 kinds of things, then you will only have to ensure in the assessment proceedings, the AO writes that the AR submitted this paper, the letter dated so and so. So once your letter dated so and so is acknowledged in the assessment proceedings, then that becomes a finality that you have submitted all the papers. But unfortunately, in the present system, and that English system is no more a very good system. When you are submitting such letter across the table, and which you have to, at that time no acknowledgement is given. So sometimes, you know, in the present modern day scene, since all are, in fact, the authorities are not really sacrosanct and cases are more happening, what was produced is not referred into the assessment order. So you can, as a matter of, you know, precaution, you can also file the very same copy, the tapal also, in the dispatch also. Now I think I'm not so much conversant because office takes case. In the e-system, I think all these systems will be taken care of, and there should not be any problems. But suffice to say that you should not submit any additional evidence without the knowledge of the additional commissioner appeal because it cuts a very sorry figure when it comes to know, and it goes against ultimately your interest only. But when it comes to ground, which was never discussed at the AO level, you can always raise the ground. In the same manner, when I told you that the commissioner appeals have got powers to enhance your income also, because the income will be like this: return income 100, assessed income 120. Now, commissioner appeal can make it 140 also. For that, he will have to give you a separate notice for his enhancement, and generally it is given mentioning the reasons for enhancement and quantifying the enhancement also. So this is a very important issue before you decide the appeal. At the same time, Commissioner of Appeals powers to enhance the income is not so much unlimited also, for the reason that these powers are confined to only the assessment record, not confined to the grounds raised by you, but entire assessment record. So, for example, it is said that it is an established position of law that in an enhancement of income, the Commissioner of Appeal cannot add a new source of income. So the SSC has submitted this return of income as the steel business income, textile business income, and he has not included any income by way of his commission business income or by way of his third income, for example, you know, some other business. Then Commissioner Appeal cannot add a new source of income, and therefore his power to that extent is limited. And subject to that new source of income, you know, and a power of inquiry also not confined to only the assessment record. So whatever was available before the assessing officer, that much only can be to form the assessment record which the Commissioner of Appeal can refer to. Generally, 1 or 2 hearings only are nowadays done, but cases are also many where many hearings happen. Taking a date is not your entitlement, but initially generally dates are given on liberal basis. But if you do not appear and you think that the case will be dismissed, it may be dismissed and it may not be dismissed. Because the law, as I told you, in the interest of the SSC as well as in the interest of the revenue is that appeal cannot be withdrawn. Similarly, appeal cannot be dismissed. Yes, invalidly file appeal, defective appeal, not rectified in time can be a non-appeal only. But appeal, once hearing commences, cannot be dismissed on the grounds like non-appearance, etc. It has to be decided on merits. It has to be decided on the papers and documents which are available on record. When it comes to CIT appeal hearing, the law also provides that the SSC has the entitlement to represent himself through AR. The assessing officer also has the entitlement to represent himself, either himself or through his departmental representative. But very rarely this is done because the hierarchy, the assessing officer, although not provided in law, but generally he gives respect to the CIT appeal, and only when CIT appeal calls him, then he appears, and he appears generally personally. I have not come across the case where assessing officer is being practically represented by the departmental representative, although he has the entitlement to exercise this entitlement, to exercise this right also. Coming to the tribunal, which is certainly, I would say, ITAT is undoubtedly one of the finest forums in the country today as far as knowledge, as far as the manner in which the cases are decided. No doubt, the issues have entered the ITLT also in a big manner. But at the same time, the forum of ITLT is very efficient, and you cannot, by and large, get injustice if you have merits. I am not touching the other aspects. My statement is confined to if you have merits, then you cannot get injustice. Other aspects are at large for you to understand. That appeal before ITAT and appearance before ITAT would require a lot of preparation even for the established practitioners also. Some of the fine aspects which are known to me, I'll try to present like this. That appeal should be filed very correctly, because otherwise you will get a notice from registrar, and these aspects are many times ignored at the CIT appeal level but not at tribunal. For example, who should sign the appeal? Now, normally that the one who is entitled to sign the appeal, I think the section, if I am mistaken, just it is 140 certainly, but I think capital A also. But 140 certainly, that who should sign the return, the same person only can sign the appeal. So individual, or in his absence, the authorized representative, power of attorney. But when you come to partnership and when you come to companies, the law is little stretched one. What is the stretched one? That the partnership also now, based on the old practice and old law, they have provided the managing partner has to sign the appeal. So if your partnership deed does not have managing partner, most of the deeds do not have managing partner, then then any partner can sign. But if the partnership deed has managing partner, then managing partner only has to sign, and if he has not signed because he's out of station, etc., then another partner can sign. But explanations will have to be attached. And same way company, the managing director only has to sign. And if there is no managing director provided in the company, then any other director can sign. And if managing director is provided but is out of station, etc., for any other reason, he can't sign, then any director can sign, but again the explanation will have to be attached. And tribunal, many times the registrar demands also. Then there may be other defects also in the appeal. Then you will get the notice generally for curing the defects. Defect by very term means that you have an entitlement to cure it. But many a times for various technical reasons, some registrars may take a very serious view that if the appeal is not filed by is not signed by the correct person, then it is not an appeal only, and I will dismiss it. The dismissal, no doubt, will be ultimately get restored by you. You will win in the higher forum, but ultimately all these things are very costly to you, and therefore you should go very systematically. After your appeal is filed, again there is no admission stage here. Directly hearing starts unless you have the delay case and condonation of delay, etc. Then the hearing starts. Preparing for the tribunal, some of the fine aspects I'll mention. That one of the crucial difference is that CIT appeal, if you file 1,000 papers, it is necessary for him to peruse all the 1,000 papers and pass the order. That he may not do so, and there can be any consequences, is another aspect, because consequences in India generally fall upon the citizens only and not the authorities. But law requires that he has to peruse every paper and document. At tribunal, this is very important aspect. That you have filed a paper book, 100 pages, 200 pages, 20 pages, does not mean that the tribunal member while drafting the order will have to peruse every paper. This is very important. Law of pleading is clearly applicable here, meaning that only those papers and documents which you have referred to in your arguments at the tribunal are compulsory to be referred to by him while drafting the order. That he may refer other papers and documents is his liberty, his option, but not his duty. And therefore, many a times what happens, the tribunal members in India, the paucity of time is very important aspect, although in justice it should not be so frequently exercised. But many times reasons also, because tribunal members are very knowledgeable, they grasp your matter. So by the time you have completed to your satisfaction, you are told, okay, we have heard you, let DR speak. But you should go prepared that these pages I must mention, but so far you have not mentioned. So you may say, Your Honor, I am not going to place any additional submission, but kindly let me mention that I am relying upon this page numbers, which are this, passing reference of what is what. So he also understands your point. He will write down those page numbers. And whenever you mention page number, whenever you mention a particular citation, some citations are not compulsory to be submitted at the ITR when your citation is ITR or ITD. Now, whenever you mention page number or citation, you take time and you may mention it so patiently, so with such poses that he has time to write down his diary, to write down that page number or that citation number. And when you repeat the citation number, he also understands, so he'll write down. Thereafter, if he has not referred to that page in the order or contents of that page, then you have a right to apply for rectification. Rectification is applicable at tribunal also. The powers of rectification are contained in 254, and there the powers and duties of the tribunal are higher than is contained in 154. Coming to the tribunal practice, therefore you will have to go very prepared that which papers are very, very crucial to be mentioned in your arguments. Second aspect which I find is that sometimes the practitioner starts his argument by referring to judgment. Although not completely ruled out always, but most of the times this is a very bad practice. And you are immediately told, let us understand the facts first. So this telling is, telling you that do not cite the judgment, please speak the facts. When you are presenting the facts, it is the practice, and based on law also, you should present the facts based on the assessment order and or CIT appeals. If you are traveling outside, then you will have to mention so that these things were presented but not considered by the AO, and therefore it is not appearing in the assessment order. Because the moment you start speaking facts of the case, by and large, if as far as possible, you should refer to particular paragraphs of the order only. But in cases of, in certain cases, what we believe is that, and what I prefer is that your honors, in a crux, the matter is like this. So in 2 minutes, if you mention the matter and then go to the order, then it gives a good background of the case. So your statement, your presentation of the facts should be first step, and it should be based on the relevant paras of the AO and CITA. How much you should speak? I would submit that you should speak as much as necessary, but not extra. Sometimes you have dilemma also, whether to speak this and why to open up this topic at all. It may not be your interest. And but then you have fear that if the DR speaks, then what? First of all, you should know that in tribunal, as well as in other higher forums also, you always get 2 chances minimum. First, you present your case as an appellant, if you are the appellant, and then you sit down. After the DR speaks, you get another opportunity. In most cases, the tribunal member will tell you, yes, AR, or you can also say that I want to submit it. Now, by and large, although not strictly implemented and not desirable also, but by and large, your answer should be, your second inning answer should be confined to what the DR has spoken. Because it is a question of your credibility, and the tribunal member may mark and taunt you also. That first time you spoke, you should have spoken out the things. DR spoke, your second chance is confined to the what DR spoke. So if you bring out something, what DR did not speak at all, not relevant to what DR speaks, then question does arise that why you did not speak out that in the first instance. But in appropriate circumstances, this cannot be a formula. This cannot be hard and fast also. Then secondly, what I have marked, friend, is that, and I believe this very emphatically, that the time of oratory continues, but not with that much weightage. Gone are the days where a person was so highly appreciated by his oratory and all these things. Today also appreciated. But today, more than oratory, very rightly, is there your contents. You will find many cases in tribunal also that one either AR or DR has spoken for 1 hour and the other side speaks only 5 minutes, and the decision comes in favor of the person who spoke only 5 minutes. What I'm trying to say, you should be clearly on the issues, on the facts. You should be to the point, and you will be highly appreciated. You will be highly appreciated. You should be able to have much clarity of the subject which you are speaking. Paper book is very important document in the tribunal hearing. If you are the appellant, you must submit the paper book, because otherwise how tribunal will come to you. You see, there is a generally understanding. I'm sorry. There is an understanding that the file moves, but file does not move, because when your assessment order is passed, when you appear before the CITA, the civil court proceedings, etc., is not applicable here. The entire file of assessment order does not move with the CITA, although that could have been, I have not gone into this. So your file of the assessment remains at the assessing officer level. Now CITA creates another file on the basis of submissions. And therefore, whatever you submitted to AO is once again necessary to be submitted to CITA. Again, the file does not move to the tribunal. So when you file the appellate tribunal, you must submit the paper book, which contains the papers and submissions which were there before the CITA. And practically what happens, that even though you are not appellant, the department has filed the appeal. Then also, most of the times, it is your duty to file the paper book, because otherwise tribunal tells you, you file the paper book. Although strictly speaking, it is the duty of the DR. Now, paper book is very important because again, you cannot file any additional submissions, additional evidences. Additional evidences, if you want to file, now it is more difficult because at CITA, you said you could not file at AO level. Now you will have to prove that you could not file at AO level, you could not file at CITA level, and for this much time. So the case is very difficult for you, but not impossible, because ultimately justice has to go on merits and not on technicalities. But the additional evidence, if you want to file, it will have to be by way of a supplementary paper book. So do not mix up with the with your main paper book. And supplementary paper book, then you will have to write in the forwarding only the reasons why additional evidences should be admitted. And unless the additional evidences are admitted officially and in writing, your appeal proceedings will not go further also. Sometimes you filed one set of paper book, thereafter you fill another set of paper book, or tribunal directs you. So that is called additional paper book and not supplementary paper book. But in any case, you should take care that if first paper book was given the page number 1 to 57, the second paper book starts from 58 to 75, and third, if at all becomes necessary, then 76 onward. So the reference to the paper book becomes very, very easy and clear. And here, as a matter of rule, you know, the ITAT rules, you must read while practicing ITAT. That here, as a matter of law, you will have to sign every paper as an SSC. At this page, you know, sign every page, and you will have to file the certificate also. That all the papers and evidences which are being submitted to the ITAT have been filed before the lower authority or authorities. Why so? Because sometimes you might not have filed some papers at AO level and at CITA level only. The hearing before the tribunal is very, very learned one, because exposure wise also the tribunal members were very high level of exposure. Although this is general proposition I am mentioning, in a particular case, the case can be different also. And therefore, one will have to not only go well prepared, but as I said, one will have to go into the case laws which are operating both the ways, and one will have to strictly know the law precedents, because when the counter judgments, counter decisions are raised before the DR, you will also have to emphasize the law precedents only, that the decision of the jurisdictional ITAT versus as well as the decision of the jurisdictional high court, vis-a-vis the decisions of the other tribunal and of the other high courts, etc. Then at the ITAT, you may find that if the arguments made by you and the contents are not fully reflecting in the order, you can file a rectification application. But it is always advisable, to my understanding, that you should file gist of the submissions, written submissions, either at the beginning of the argument or at the end of the argument. So it will ease the work of the ITAT member also in drafting the order, and it will go in your favor also. I am not going into the languages at the ITAT and the single member bench, division bench, and 3-member bench or 3rd-member decision, etc. They are all procedural aspects, and those who are in tribunal practice know it. First aspect was always to understand the appellate proceedings in more detail, where clarity is required. Other aspects can be acquired on the spot also, and I do not pay more importance to all these other procedural aspects also. Let me tell you, in the context of institute only, and in the context of Reserve Bank only, and in the context of Department of Cooperation only. I first time visited the Bombay High Court. I never had gone to Bombay High Court, and first time I not only visited but pleaded all these petitions in person. And in the first petition against Institute and RBI, as many as 5 topmost counsels were put up against me. That went in favor because so many journalists used to attend our hearing, and most of the newspapers gave my judgment also. What I believe, friends, is that today also, in the midst of all the criticisms, which should be balanced, the Indian judicial system, the ITAT, and the income tax appellate level also are working very, very systematically, and they are capable of giving, by and large, good justice to the people. The only thing is that in the legal parlance, one should also be knowing that there is always something next in the legal parlance. So never lose faith in the justice system. Always there is a next in the legal parlance, and that makes the justice system lengthy also. Unfortunately, the justice system is very costly also, and we lost the case, very important case at the institute before the Supreme Court, that even when the National Tax Tribunal is constituted, where earlier in the draft law, we as chartered accountants were entitled to appear at the National Tax Tribunal, which will be in place of High Court, and like our members are entitled to appear at the National Company Law Appellate Tribunal. Same facility was here also, but the Bar Council went at the Supreme Court, and I know this time that there was no senior counsel who was ready to take our case also, because they thought it will go against the Bar Council, which is a very, very, very shallow view of the law. I would appreciate in that context, not on merits, but on the premises of the law, that Ram Jethmalani took up the matter of the killers of Indira Gandhi. He said everybody must get the justice. I am not saying that you free them, but if they are not really culprits, and how much quantum of punishment also, they are matters of law, and everybody must have the justice system available. But somehow the things are, rather than progressing in the matter of convictions and all these things, we are becoming regressive. In fact, if you express some view of your own on the social media, you will find that there is a galaxy of people. There is a gallery of people who will start bombarding you because they have particular conviction, they have particular philosophy. What is so wrong? Let them continue their conviction. Let you have the liberty. But unfortunately, that aliveness is far or very much remote in present times. Things are opening out very fast. What I am trying to tell is that as chartered accountants, you are very, very learned. The kind of the examinations which all of us have passed is second to none. The depth is very, very high. Unfortunately, the depth has been reduced to shallowness by so much of the parrot kind learning that one tells in the CA practice also. I did not learn this in the articleship, and I do not know. So the other interviewer realizes that this person, his learning is based on what was taught to him. When you become a full-fledged chartered accountant, you should be able to say, yes, I'll be able to do the airline audit, even though I have never done it, because I am an auditor. Similar is the kind of expertise you should have in the subjects in which you are operating, and that requires dedication. Unfortunately, in the largely becoming marketing era, marketing time is more dedicated, and I am not against that also, because that may be the requirement of the modern day practice also. But what is required, friends, is that what Chitleji in the beginning mentioned, I believe, and few of us are very, very capable, and I confidently say that we are far better draftsmen on many, many documents than the so-called legal experts also. It requires, because knowledge is not anybody's prerogative. Your imagination is very high as a CA. Your interpretational power is very high. But unless you have the clarity of the law in which you are entering, unless you've got the clarity of the facts. Knowing the facts is one thing, and clarity of facts is another thing, and which can be developed also if not there, provided you get involved yourself. You visualize the things with 360-degree, viewing, and you spend some time. In fact, initially, if you spend more time, my experience is that later on, 5 minutes perusal of the facts also will tell you that yes, you know everything, because then you become so expert in understanding the facts and things also. I always tell a newcomer that the 60-page judgment by experience, you will realize that the last 5 or 7 pages are most important. Only rarely you may have to go into the initial 50 pages also. But these all things come by not only passage of time, but more by involvement. Once you start involving, once you start understanding with depth which is required, I am sure each one of us have the potential to reach to the top also, to reach to our satisfaction also, because top may not be the goal of everybody. I believe that in life, one should try to achieve that thing which one gets satisfied. And everybody's goals can be separate also. I might have taken little more time, but I think I have tried to do justice to the best of my abilities. Thank you very much. If I have not touched upon some other aspects, to the extent possible, we can discuss. And otherwise, I'll end up my session here. Thanks a lot.
Thank you very much, sir. It's really nice to see you and take guidance from you on important topics or topic of CIT, Appeallate, and ITAT Appeallate proceedings. Dear members, tomorrow we are going to have mock tribunal. So regarding that, all the all the case papers would be mailed to you by today evening. So we request you to please go through the papers so that it will be beneficial when you are looking into the case and when you are attending the mock tribunal, you would understand what discussion is going on. So there are 14 to 15 chartered accountants are working dedicatedly for that mock tribunal. We hope that we can give appropriate output tomorrow of that mock tribunal. I would like to thank Tarun Ghia sir for giving his wonderful insights on the topic. And today's discussion, whatever he has taken, it will be a good basis for tomorrow's mock tribunal. With that intent, Tarun Ghia ji agreed to take that topic, and it was it is so nice of him. He accepted that topic immediately, and he gave guidance on that. So, dear members, it is today 15th of August. I once again wish you all a very happy Independence Day. You please take due care at your respective offices home, and we look forward to see you tomorrow 9:30. We would be having address from ITAT members. Two ITAT members will be interacting with us, and after that we would be starting with the directly with the mock tribunal proceedings. So once again, I place my gratitude to Tarun Ghia sir, and thank you all members for joining. Yes, thank you. We conclude today's session.